Hi everyone, good afternoon. How are you all? Fine, very good. My voice is audible, screen is properly visible, everyone? Okay, sure. Then let's start with today's lecture now. Okay, so yesterday we completed the first part of the chapter, basics, and today, and in fact, yesterday only we started with the second part, deductions available under the head PGBP. Okay. So in deductions, we did section 30 first. Section 30 says that if you are an assessee and you are using any building for your business or profession, and for that building, the following four expenses you have incurred. Number one, rent. Number two, rates and taxes. Number three, repairs. And number four, insurance premium. So all these four expenses which are related to this building will be allowed as a deduction from your business income. Meaning from your business income, you can reduce these four expenses. Okay. So with regard to rent, whatever discussion was supposed to be done, we have done that discussion yesterday only. With regard to repairs also, we have done the discussion yesterday. For insurance premium, there was no discussion as such. Okay. Simple thing, if you have taken the insurance policy of your building, which is used for business or profession, for that insurance policy, whatever premium you have paid in this year, that entire premium will be allowed as a deduction. Whether you are the owner of the building or not the owner of the building does not make any difference. Okay. Now, if I say that rates and taxes means those taxes, those rates which are paid for that building which is used for the purpose of business or profession. So can I say municipal taxes can be there? Yes. Even the state property tax or other property taxes, land revenue, etc., whatever taxes which are related to that building, all those taxes, whether paid to the local authority or paid to state government, will not make any difference. That will be allowed under section 30. So unlike your house property head, where the taxes paid to local authority for the property was only allowed in the form of municipal tax, yes or no? Here they are saying that whatever rates and taxes which are related to your property, related to your building, which is used for business or profession, all such taxes, all the rates will be allowed as a deduction. But wait, if those rates and taxes are paid by you as an owner, then also it will be allowed. And if you are the tenant, if you are using a building which does not belong to you, which you have taken on rent, for that building also whatever rates and taxes you have paid will be allowed as a deduction. Now when you take the deduction for these rates and taxes under section 30, so the rates and taxes will be allowed under section 30 subject to 43B. What did I say? Subject to 43B. Now what is this section 43B and what does it mean? In order to explain that, I will have to give you the details of section 43B. Okay. So section 43B is a disallowance. See, the entire chapter is divided into 5 parts, no? So the third part of the chapter is disallowances. In the disallowances, there is one disallowance which is under section 43B. So first of all, you will have to understand what is 43B, what does it want to tell you. Then again, I'll come to rates and taxes. Okay, no? So first of all, let's understand what is 43B. See, 43B says that if you are an assessee, you are incurring following expenses: C, T, B, I, L and R. C for contributions to approved superannuation fund or RPF, ASAF or RPF of your employee, or contributions to approved gratuity fund of your employee. That contribution is your expense because you are contributing that amount for the employee That is your expense which will be allowed as a deduction under PGBP head. See, later on, there will be one section 36 subsection 1. In that clause 4 and clause 5 are there. So as per section 36 subsection 1, clause 4 and clause 5, this expense is allowable as a deduction. Because for your employees, you are contributing money. Right now, just focus that this is an expense which is allowable under the head PGBP. Okay. T for taxes, duties, cess, fees, which are payable under a law to the government. So any tax, any duty, any cess, fees, etc., which is payable under a law to the government. But those taxes should be related to your business. Those taxes should be related to your profession, like GST is there. Why do you pay GST? Because you are doing such type of business. You are buying and selling goods and buying and selling goods and services. If you are buying and selling goods or services, then only you are liable to pay this GST. If you are not buying and selling, you are not liable to pay GST. Meaning the GST is a tax which is related to your business or profession. Sometimes you can import the goods from outside India for the purpose of your business. Okay. So those goods which you have imported, on those goods you have paid customs duty. You have paid import duty. So that import duty is paid on the goods which you are, in which you are dealing into. So even that customs duty paid by you is what? Is a expense which is related to your business. It is a tax related to your business. So any type of taxes which are paid in relation to your business or profession, if you are doing this type of business, if you are doing this type of profession, only then you are liable to pay this type of tax. So the taxes which are related to business or profession, like sometimes professional taxes are also paid. If you are into a profession, on your profession you are liable to pay professional tax. For your employees, you are paying their employment tax. So these are all the taxes which are related to your business or profession. Even for these taxes, the deduction is available under PGBP. B for bonus and commission to the employees. B for bonus or commission to the employees. So this is also your expense which is allowable under the head PGBP. I for interest on business loan. So the loans which you have taken for the purpose of your business are all business loans. For this business loans, whatever interest you are paying, even that interest is an allowable expense under the head PGBP. L for leave salary. To your employees, if you are paying leave salary, so even that leave salary is your expense in the business. Even that is also allowable under the PGBP head. R for railway assets. In your business, you might be using some railway assets. Okay. And by using those railway assets, the assets which belongs to the railway, those assets you are using for your business. For example, railway hoardings are there. You are using those hoardings to put the advertisements. Yes or no? So those hoardings are what? Assets which belong to the railway, but you are using them to put your advertisements. For example, there are small, canteens on the railway platforms. Those are all canteens which belongs to the railway only. But you are running those canteens. You are in the business of running the canteens. So that canteen will be given to you for rent. Sometimes you have to transport your goods from one location to another location. You can use the, rail compartments also for transportation of the goods. There are luggage trains also, no? So those trains are used. The train compartments are used for transportation of your goods. So you will be paying freight charges. So certain assets which belongs to the railways, sometimes the assessee uses those assets for his business. So whatever payment you are going to make to the railways for use of its assets, even those payments are also your business expenses. Even they will be allowed as a deduction under the PGBP head. See, these are the expenses. C, T, B, I, L, R. these expenses are allowable as a deduction under PGBP head under different sections. Right now we are in section number 30, no? So later on we'll go to section 31, then 32, then 33, 36, 37, 1. In any of the succeeding sections, any of these expense you will find out. So as per the provisions of the PGBP head, these are the expenses which are allowable as a deduction under the PGBP head. Getting my point? Now, if you are an assessee, you are following mercantile system of accounting. Which accounting? Tell me. Mercantile system of accounting. So all the incomes which are taxable under the PGBP head, you will show those incomes on mercantile basis. Whether that income of this year is received or it is still receivable, no matter what, it will be taxable under the PGBP head. Because you are following mercantile system of accounting. If an expense relates to this year, whether that expense is actually paid or not, will be allowed as a deduction in PGBP head because you are following mercantile system of accounting. Yes or no? So all the incomes will be taxable on mercantile basis. All the expenses will be allowed on due basis, meaning mercantile basis. But wait, all the expenses, if you are regularly following what? Mercantile system of accounting. So your PGBP income has to be calculated by following mercantile system of accounting. All the incomes will be taxable on due basis. All the expenses will be allowed as a deduction on due basis except for these 5 expenses. There is one more expense that we are going to learn later on. Okay, no. But as far as these 5 expenses are concerned, if any of these expenses you have incurred for this year, these will not be allowed on due basis. Even though you are following mercantile system of accounting, even though you are going to calculate your PGBP income on mercantile system, claim all the expenses on due basis except these 5 expenses. These 5 expenses will be allowable under the head PGBP only on what basis? Payment basis. Meaning that if these expenses belong to this year, and if they are paid, actually paid in this year, only then they can be claimed as a deduction from this year's PGBP income. Yes or no? What if they are paid later on? Later on also, if you have paid, then at least pay in the next year before the due date of filing your return for this year. Whatever year this is, for example 24-25 this is. So there will be a due date of filing return of this year which will come in the next year. So we usually file income tax returns, we all know, na? So for a year the return has to be filed in the next year, in the assessment year, before the due date. So there are due dates for filing return of income. Those due dates can be 31st July. For some assessees, the due date is 31st of October. So can I say, if I'm talking about a previous year, this is my previous year, okay? If this is my previous year, previous year 24, 25. So whatever incomes I have earned in this year, the details of those incomes, the taxes paid for this year, every detail I have to share to the income tax department by filing my income tax return for this year. So this year's income tax return will be filed in the next year, meaning in the assessment year 25-26. For this year, the total income will be computed. The tax liability will be determined. And I will file my return for the previous year, 24-25 in the assessment year. So in the assessment year, the due date of filing the return of income in some cases is 31st July of the assessment year. In some cases, it is 31st October of the assessment year. Now you have to check that which due date was applicable to the assessee. Okay. For example, if 31st July due date is applicable, then all these expenses C, T, B, I, L, R, these expenses which are for previous year 24-25 has to be paid in 24-25. If not, then at least pay them on or before the due date of filing your ROI. Only then these expenses will be allowed as a deduction from the current year's income, meaning from the income of the previous year 24-25. So if you want to claim these expenses as a deduction out of the income of 24-25, they have to be paid in 24-25 itself. If not 24-25, then at least before the due date of filing return of income for 24-25. But what if due date is gone? And on or before the due date, these expenses are yet not paid. Then 43B will come into picture. And as per section 43B, these expenses will be disallowed. These expenses will not be allowed as a deduction out of your income, business income of 24-25. Later on, whenever you will pay, no, in that year, you claim these expenses as a deduction, but not from this year's income. Hello? Income of this year will be taxable in this year, whether received or receivable. Expenses of this year will be allowed as a deduction in this year, whether paid or still payable, because you are following mercantile system of accounting. But for these expenses, your mercantile system will not be useful. Even if you are following mercantile system of accounting, even if for this year, all the expenses of this year are allowed on due basis, but these 5 expenses will be allowed only on payment basis. They have to be paid in this year or on or before the due date of filing ROI of this year. But if they are not paid on or before the due date of filing their return of income, these expenses will not be allowed as a deduction out of the income of 24-25. They will be disallowed. It is given in 43B. Getting my point? Everyone understood? Now tell me one thing. When these expenses will be allowed? Later on, in the year in which they are actually paid, these expenses will be allowed as a deduction out of the income of those years in that year. So if this expense is paid in next year, in example, December 25, you have paid this expense. Come on, tell me. So is it paid on or before the due date of filing your ROI of this year? No, it is paid in December 25, meaning the next year. And next year also it is paid after the due date of filing your ROI. So December 25 it is paid, meaning it is paid in the previous year 25-26. It will be allowed as a deduction out of the PGBP income of 25-26. Getting my point? But in this year they will be disallowed. So do you remember C for contributions to the employees provident fund, RPF, ASAF, approved gratuity fund, T for taxes, B for bonus and commission, I for interest, L for leave salary, and R for railway assets. Amount payable for use of railway assets. Yes or no? Can you see the second point? Second point is T for taxes. Any taxes which are related to your business. What did I say? Any taxes related to your business will be allowed as a deduction under the PGBP head only if they are actually paid. If the taxes for this year are paid in this year, will be allowed in this year. If the taxes for this year are at least paid on or before the due date of filing of ROI of this year, then also they will be allowed in this year. Yes or no? But if these taxes are not paid on or before the due date of filing ROI of this year, then these taxes will not be allowed as a deduction out of this year's PGBP income. They will be disallowed as per 43B. Will be allowed as a deduction in the previous year in which they are actually paid. Yes or no? Now come to rates and taxes. Do you have a building used for the purpose of your business or profession? Rates and taxes of this building is T for taxes. Hello sir. Any taxes related to this building, section 30 says that you are going to get the deduction for those taxes. Yes or no? But only on payment basis. If these taxes of the building are paid on or before the due date of filing ROI of this year, only then these taxes of the building will be allowed as a deduction out of the PGBP income of this year. What if the taxes of this building, rates and taxes of this building are not paid on or before the due date of filing ROI of this year? Then the rates and taxes of that building will not be allowed as a deduction under section 30. As for 43B, they will be disallowed. They will be actually allowed in the year from the PGBP income of that year in which they are actually paid. Will you remember? Sure, sir. Please pay attention. See here. If you are an assessee, you have incurred expenses for the purpose of business or profession, CTBILR. They are allowable under the head PGBP, but shall be allowed only on payment basis, even though the assessee follows mercantile system of accounting. Claim all the expenses on due basis, but not these expenses. Getting my point? Now, in other words, CTBILR are not paid during the previous year, or they are not paid on or before the due date of filing ROI of the previous year, then section 43B will be applicable, and as per 43B, CTBILR, these expenses shall not be allowed as deduction in the previous year. However, they would be allowed as a later on in the previous year in which they are actually paid. Understood? Hence, the rates and taxes of the building used for the purpose of business or profession allowed under section 30 subject to 43B. Subject to 43B means payment basis. Got it? Section 30 over. So will you remember section 30? Which 4 expenses are allowed as per section 30? Will you remember? Those 4 expenses are related to the building which is used for the purpose of your business or profession. Number 1, rent, rates and taxes, repairs and insurance premium. Now in your business or your profession, will you use only building or other assets can also be used? Other assets can be used. What other assets you can use? Come on, tell me. Can you use furniture? Furniture fittings, yes or no? Can you use plant and machinery, etc.? So under the PGBP head, no, there is nothing like computer. There is nothing like air conditioners. If the asset is a tangible asset, the tangible assets can either be furniture or fittings. If not furniture or fittings, they will be building. And if they are not building also, then all the tangible assets are treated as what? Plant and machinery under the PGBP head. So whatever assets which you will see here under the PGBP head, either those assets are what? Furniture and fittings, tangible assets, furniture and fittings, or they are buildings. If those tangible assets are not furniture and neither they are buildings, all the other tangible assets are known as what? Plant and machinery. Vehicles are what? Plant and machinery. Air conditioners are what? Plant and machinery. Motor cars are what? Plant and machinery. Machines are what? Plant and machinery. Aeroplanes are plant and machinery. Ships are plant and machinery. Books are plant and machinery. Whatever you will see, every damn single thing is a plant and machinery. Even computers are also treated as plant and machinery. Getting my point? So in your business, you can use building. Discussion about the building is over. But apart from building, you can use furniture fittings also, and you can use plant and machinery also, no? So section 31, which section? Section 31 says that if you are an assessee, you are using plant and machinery or furniture for the purpose of your business or profession, then any repairs or insurance premium of this plant and machinery or furniture will also be allowed as a deduction. Section 31 over. So because of section 31, you can claim these 2 deductions. Deduction for these 2 expenses. Only these 2. Repairs and insurance premium. Whether this plant and machinery or furniture is actually owned by you or not will not make any difference. You have owned the plant and machinery and furniture and using in your business, still it will be allowed. You have taken the plant and machinery and furniture on rent, you are not the owner, still these 2 expenses can be claimed as a deduction by you. Yes or no? So assessee can be the owner or assessee may not be the owner of plant and machinery or furniture which he is using for his own business or profession. So whatever repairs expense or insurance premium the assessee is paying for these assets will also be allowed as a deduction. But remember, repairs must be, do you remember, current nature and not capital in nature. Capital in nature means by incurring this cost of repairs, is the capacity increasing? Is the value increasing? Yes. Then it will be of capital nature. Will not be allowed here. So all the repairs cost which are incurred to keep the plant and machinery and furniture in their working condition, by incurring such repair cost, the efficiency or the capacity of that asset does not increase. All such repair expenses are known as what? They are known as current repairs. So only the current repairs of plant and machinery and furniture will be allowed under section 31. Any repairs which is of capital nature, which enhances the capacity or enhances the efficiency of these assets, then that repair cost is known as what? That repair cost is known as capital repairs. And the capital repairs cannot be claimed as deduction under section 31. Rather, it will be allowed as a deduction in the form of depreciation. Got it, sir? Add it to the cost of your asset. It will be allowed in small parts in the form of depreciation. Hello, sir. Now tell me, if rent is given for plant and machinery or furniture which is used for business or profession, can you claim this rent under section 31? No. 31 says that you can claim only repairs or insurance premium. But if you cannot claim, if you are paying rent for the plant and machinery or furniture in your business or profession, you are using some plant and machinery or furniture which does not belong to you. You have taken that plant and machinery or furniture on rent. So can you claim the rent of that plant and machinery or furniture as a deduction under section 31? The answer is no. Section 31 can allow only two deductions. Only deduction for these two expenses. But tell me, is it your business related expense? The answer is yes. The plant and machinery or the furniture is used in my business, sir. So any rent which I have paid for this plant and machinery or furniture is an expense related to my business, sir. But that expense you cannot claim under section 31. That expense will be allowed as a general deduction under section 37(1). Did I tell you yesterday? All the expenses which are not covered by specific sections, but they are incurred wholly and exclusively for your business, for your profession, and those expenses are revenue in nature, then all those expenses you can claim under one single section known as general deduction 37(1). So this expense, rent of the plant and machinery or furniture which is used for the purpose of business or profession, this rent cannot be claimed as a deduction under section 31. But since it is your business related expense, it will be allowed under section 37(1). You can claim the deduction for this expense also. Will you remember this? Sure, everyone? Perfect. Okay. Now coming to section 38. But wait, this section 38 which we are going to discuss now, this section 38 is applicable for all the expenses as well as the depreciation of the assets which are used for the purpose of your business or profession. Whether those expenses are allowable under section 30 or 31 or any other section, or even the depreciation which is allowable under section 32. So what I mean to say here, I mean to say that the expenses which are allowable under section 30 or 31 or other sections, and depreciation which is allowable under section 32. So all the expenses and the depreciation, and this expenses and depreciation are for assets those assets which are related to your business or profession, which are used in your business or profession. So remember one thing, if the asset is used only for business or profession and no other purpose, then the entire expense or entire amount of depreciation can be claimed as a deduction. Full amount. Yes or no? But what if the asset is used for any other purpose other than business also, other than profession also? Can the asset be used for personal purpose also? Yes. So I am using that asset in my business also, and I am using that asset for my personal purpose also. So whatever expense or the depreciation of that asset is there, that entire amount of expense or depreciation I cannot claim. The expense or the depreciation which relates to the use of the asset for any purpose other than business or profession will not be allowed as a deduction. It will be disallowed. Only that part of expense or that part of depreciation will be allowed as deduction which is relatable, which is apportionable to the use of the asset for the purpose of business or profession. Only to that extent the expense or depreciation can be claimed as deduction. It is given in section 38. So section 38 disallowance will come into picture while claiming deduction under section 30, while claiming deduction under section 31, while claiming deduction for depreciation under section 32, or while claiming deduction for expenses of the asset under any other section. Section 38 will come into play. Getting my point or not, everyone? So as per section 38, any expense or the depreciation which is not related to the use of the asset for the purpose of business or profession cannot be claimed as a deduction. It will be disallowed. Only that part of expense or depreciation which is relatable to the use of the asset for business or profession, only that much can be claimed as deduction. Will you remember? So for example, repair cost of motor car. Motor car is a plant and machinery. Hello. So repair cost of motor car will be allowed as a deduction under section 31. Entire repair cost can be claimed as a deduction, provided the motor car has to be used only for business or profession. But 1/3 of the use of that motor car, for 1/3 period, the motor car was used for personal purpose. If it is given, then entire motor car expense cannot be claimed as deduction. Only 2/3 can be claimed as a deduction. The 1/3 proportionate amount, 1/3 amount which relates to the use of motor car for personal purpose cannot be claimed as a deduction over here. And even the 1/3 depreciation of that motor car can also be disallowed. Getting my point? Only 2/3 expense or 2/3 depreciation of that motor car can be claimed. This is section 38. Will you remember? Sure. So whenever you are going to claim deduction for any expense or even the depreciation under section 30, 31, any other section, or even section 32, depreciation also, yes or no? You have to keep in mind section 38 also. Keeping in mind section 38, you are supposed to take the deduction for these expenses and depreciation. Got it? So can I say expenses and depreciation of the assets shall be allowed subject to section 38. And what is section 38? We all know. Perfect? Okay. So let's move on. And let's start with depreciation. Now before starting depreciation, I would like to ask you all that what is the meaning of depreciation? What do you understand by depreciation? Come on, give me the answers. I want answers from you. Don't send that answer. Wait. Don't send me that answer. You were typing some answer, no? Delete it. Whatever it is, keep that for accounts. Depreciation is not what you were writing right now. Under the PGBP head, the meaning of depreciation is something else. So we will do it logically. This is very interesting section. It is going to start today, no? In tomorrow's lecture, this will end. The entire depreciation. Section 32 will end tomorrow. Just imagine how big this section is and how important this section would be. Independent questions are formed on the depreciation concept. And this depreciation concept is asked as a part of the main question also. And even the MCQs can be formed by giving you a case study on depreciation. You have to be very, very, very careful about this section. Okay. One of the most important sections of the entire PGBP head is depreciation. Section 32. Okay. Now pay attention. See, if there is an assessee, that assessee can be any person. Now what this assessee is doing, that assessee has acquired the assets for his business or profession. So whatever assets he will acquire, to acquire those assets, the assessee will incur cost of purchase, cost of construction, these costs which he is incurring to purchase or construct the asset for the purpose of his business or profession is nothing but the cost of that asset. Yes or no? So amount which is incurred for the purpose of acquisition of the asset, also known as what? Actual cost of the asset. Actual cost of those assets. Now tell me one thing. Do you incur this cost on a regular basis or sometimes only? Sometimes only. You don't go and buy the assets for business every now and then, no? Once in a while, you will be bringing that asset, and that asset is going to be used in the business for long period of time. Maybe for some years it will be used. Yes or no? And the cost which you have incurred to acquire this asset, definitely you are not going to incur these costs again and again, again and again. So this is something which does not happen again and again, is not incurred frequently. So can I say this actual cost which is incurred is not revenue cost, it is a capital cost. It is not a revenue expenditure, it is a capital expenditure. Yes or no? So the actual cost which is incurred, which is nothing but capital expenditure. Tell me, you are incurring this capital expenditure for your personal purpose or for the purpose of business or profession? Definitely for my business or profession only I am incurring this cost, no? So tell me, are you interested in claiming the deduction for this expense? Would you want to claim this expense as a deduction out of your business income? So the government says that since it is a capital expenditure, not a small amount, very big amount, because to purchase an asset, the cost incurred is usually a very big amount, okay? And this expense is not going to give you the benefit for this year only. It is going to give you the benefit for future years also. Hence, this entire capital expenditure, entire actual cost, we are going to disallow. Wait. Disallow means disallowed at once. Meaning that we are not going to give you the deduction for this expense straight away at a in the full amount of the deduction we cannot give. Meaning that it is disallowed in the previous year in which it is actually incurred. For example, you bought one asset in 24-25 and the cost of that asset was 10 lakhs. So the government says that entire 10 lakh will be disallowed in 24-25. Meaning that we are going to give you the deduction, but that deduction will not be given fully. If you want to claim this cost as a deduction, claim it in small parts over the number of years. And that small parts in which this cost is claimed as a deduction, those small parts is nothing but depreciation. What is depreciation? It is nothing but the actual cost of the asset which is allowed from this year's business income, next year's business income, next to next year's business income. In small parts, this cost will be allowed as a deduction. We cannot give you the deduction of this entire cost from this year's income only. Because if we try to do that, that is wrong. Why wrong? Because see, this expenditure is not going to give you, is not going to help you earn business income for this year only. This expenditure is going to help you to earn business income in the subsequent years also. So if the expenditure incurred will help you to earn business income for many years, then why are you claiming that entire expenditure as a deduction from this year's income only? This year incomes will be only this much. See, only this much income. But the expense will be this much. Don't you think that the expenditure will eat away all the income, resulting into loss? And that loss will eat other incomes also of this year. Still the loss will remain, will be carried forward to subsequent years. And in the subsequent years also, it will eat away the incomes of subsequent years by getting set off in the subsequent years. Then in that case, you are never going to pay tax to us if we allow you this amount fully right now only. Getting my point? In short, this cost will be allowed to you. We don't deny the deduction because the cost is incurred for the purpose of your business or profession only. But since this cost is a heavy cost, big cost, and it is going to give you the benefit for many years, so why don't you claim this cost as a deduction in small part in the form of depreciation from the income of this year also and from the income of subsequent years also. Getting my point? This is depreciation, my dear friends, for PGBP head. Reduction in the value of asset or obsolescence in the value of asset. All those things no relevant while doing accounting and not here. Here depreciation simply means cost of the asset allowed in small parts over the number of years. Getting my point? Some cost will be allowed as deduction from this year's business income. The remaining cost will be allowed as deduction, will be allowed as depreciation in the incomes, business incomes of subsequent years. That's it. That is nothing but depreciation. Sure. So now, if the assessee has acquired the assets for business or profession, actual cost of that asset, what did I say? This actual cost of the asset, which is known as capital expenditure, which is disallowed right now, this actual cost is allowed in small parts. Over the number of years in the form of depreciation. I hope you understood this much. Okay. So now what I'll do, I will tell you the conditions if you want to claim this cost of the asset as what? Depreciation, no? So there are three conditions which you must fulfill. Which you should, no, you must fulfill. Compulsory. If all the three conditions are fulfilled, only then the actual cost of that asset can be claimed in the form of depreciation. Otherwise, it will not be allowed in the form of depreciation also. Getting my point? But whenever I tell you that capital expenditure is incurred under the PGBP head, no. Whenever they are saying, or even I am telling you that capital expenditure is incurred, you are supposed to understand the asset is purchased. Whenever a capital expenditure is incurred, what happens? Asset is purchased. That's it. Asset purchased equals to capital expenditure. Capital expenditure equals to asset purchased. Got it? Shall we move ahead? So three conditions. Number one, asset must be a specified asset. Number two, assessee must be the owner of that asset. And number three, that asset must be used for business or profession of the assessee. The asset must be a specified asset. Only these assets, the cost of these assets only will be allowed as deduction in the form of depreciation. No other asset, only these assets. Number two, assessee should be the owner of that asset. If the assessee is not the owner of the asset, he is not entitled to claim the cost of that asset in the form of what? Depreciation. Who can claim the cost as a depreciation? Only the owner of the asset can claim the cost in the form of depreciation. Yes or no? And it is possible only if the asset is used for the purpose of business or profession. You have to use that asset for the purpose of business or profession. If these three conditions are fulfilled, no, only then the cost of asset which is disallowed can be claimed in the form of depreciation. Got it? So one by one we are going to discuss these three conditions now. We are supposed to discuss these three conditions in details. I just cannot write down and go away because you will not understand anything. So these three conditions, I am going to discuss them in detail now. Okay. First condition is, come on, tell me. First condition is asset must be a specified asset. Asset must be a specified assets. So tell me, which type of assets can be used for the purpose of your business or profession? Which type of assets? The assets which are used for the purpose of your business or profession can be intangible assets. Yes or no? And those assets can be tangible assets also. Tangible and intangible. So what are intangible assets? Come on, tell me. Patent, trademark, copyrights, brand name, franchisees. All these assets are what? Intangible. Formulas, technical know-how. Yes or no? Blueprints. There are many things. So all the intellectual property rights, IPRs, we say no, all the intellectual property rights, they are what? Intangible assets. So in your business, for your business, can you acquire some intangible assets to be used for the purpose of your business? Yes or no? So all the intangible assets are eligible. Are what? Eligible. But wait, don't write anything. The intangible assets are eligible. But the intangible asset other than goodwill Goodwill is also an intangible asset, no? So if you have acquired a goodwill for the purpose of your business or profession, then the cost of that goodwill will not be allowed fully, and neither that cost can be claimed as depreciation under PGBP head, because goodwill is not a specified asset for PGBP head. Meaning that, sir, even if I have acquired the goodwill for the purpose of my business or profession, still the cost of that goodwill will not be allowed. No, it will not be allowed fully also. It will not be allowed in the form of depreciation also. So, sir, this is bad. No, nothing bad. Don't worry. This goodwill will be taken to capital gain. Whenever you will transfer this goodwill, no, in future, at the time of transfer of this goodwill, capital gain will be calculated. And to calculate that capital gain, the cost of this goodwill will be reduced while calculating capital gain, not here. Because here, no, assessee is used to fool the income tax department. Assessee is used to fool the government by claiming the cost of goodwill in the form of depreciation. See, they have excluded goodwill with effect from 1st April 2020. Prior to 1st April 2020, no, even for goodwill also, the depreciation was allowed here. Because goodwill was also considered as a part of intangible asset because of a Supreme Court judgment which happened in the case of Smith's Securities. There was one case of Smith's Securities. In that case, the Supreme Court gave the judgment that even the goodwill can be treated as what? Intangible asset, and the cost of that goodwill will be eligible for depreciation under the PGBP head. So earlier, that judgment used to get applied, and as per that judgment, whatever cost of the goodwill was there, no, which you have incurred, that cost used to be allowed under the head PGBP only in the form of depreciation. You were very well eligible to claim that. But this was leading to some misappropriations and some tax evasion tactics used by the assessees. So I'll give you one example what assessees used to do. Okay. For example, Kaushik is there. Okay. I'm going and buying the business of Kaushik. So what is the worth of his business? The assets and liabilities of his business, no? The net assets. Whenever I find out the value of any business, what is the value of the business? The assets of that business minus the liability of the business. Net assets. That is the value of his business, no? So I came to know that his business, the value of his business is only 1 crore rupees, only 1 CR. But I told him that Kaushik, take this 10 CR for your business. For your 1 CR business, I am going to give you 10 CR, some amount extra. Why? That 9 crores which I am giving him extra, no? I am giving him in the form of goodwill. But if you will see, no, his business does not demand any goodwill in the market. His business does not command any goodwill in the market. His business is a loss-making business. Nobody comes to him. But still I am buying his business for a price which is very, very, very higher as compared to its actual worth. And saying that I have acquired that business, and along with that business, I have acquired the reputation, I have acquired the goodwill of that business, which according to me, I should pay 9 crores for that. And I paid 9 crores for that. Now the assessing officer cannot come and he cannot tell me that why did you pay 9 crore for the goodwill? My money, if I want to pay 90 crores for the goodwill also, no, then also I can pay. Who are you to tell me? In my eyes, his business commands value. According to me, if I will take over his business, no, it will be very useful for me. It will be very fruitful for me. According to me, the business has a goodwill, and in my eyes, the value of that goodwill is 9 crore. See, in my eyes, it is 9 crore. But others might not value that goodwill for Example, Akshaya is there. If Akshaya will go to buy that business, Akshaya might not pay 9 crore for that goodwill. She might pay how much? She might pay only 2 crores extra for goodwill. Kanu is there. Kanu will pay how much? Kanu will say, I don't consider that business only to be worth paying for goodwill. Hello? I'm not going to give a single penny for goodwill. Because in my eyes, there is no goodwill only. See, everyone has a different perception about the same business. So in my eyes, as per my business understanding, I should have paid 9 crores. So I have paid. Who are you to tell me that how much I should pay for the goodwill? And goodwill is not like other assets, no, whose value can be determined from free market sources, demand and supply. Yes or no? It is everyone's perception of how others' business is. So my perception about his business was I should pay 9 crores. So I paid 9 crore. According to me, if I take over his business and the goodwill of his business, it might give me more benefits in the future. So accordingly, I paid 9 crores. Understanding, no? So the assessing officer cannot tell me that how much I should pay. That is the biggest disadvantage over here. So what I did, 1 crore, only the value of the business was there, and I paid him 10 CR. 9 CR extra for the purpose of goodwill. If you see, no, his business is a loss-making business. There should not be any goodwill given to him. But still I gave. And I cannot be questioned that why I gave. Why I gave, It is known to me only that why I gave. How much I have gave to him? 10 CR or 11? 11. Out of 11, 1 he will keep for his business. Rest 9, no, even he knows, even Kaushik knows that should not be paid to him. But I paid him. I will tell him, Kaushik, do one thing. Keep 1.5 crores extra and return me the balance 7.5 CR in the form of cash. Did I get back my 7.5 CR in the form of cash? Nobody will ever come to know that I have received back my 7.5 CR out of 11 CR. Hello, sir. 7.5, no, 8.5, no, 8.5, 8.5 CR out of my 11 CR, because 1 CR I gave for his business and 1.5 CR I gave him extra. Why I gave him extra, that also I'll tell you, don't worry. Okay, 1.5 CR extra I gave him. And I told him, return me the balance 8.5 CR in cash. He must be having huge black money. That black money of 8.5 CR he will give me. He is not going to tell anyone that he has given me back 8.5 CR because he has given me through his black money. And I am not going to tell anyone that I have received 8.5 CR from him. Getting my point? So now the transaction is worth only 2.5 CR. But the bank entries and everything will be of 10 CR. Getting my point? See, out of 10 CR, if 1 CR was for his business and 9 CR I gave for what? Goodwill. And I'm telling him to return how much? To return 8.5 CR, sorry, 7.5 CR, meaning that I'm telling him to keep 1.5 CR more. So out of this, he will keep 1.5 CR extra with himself. How much remaining? Tell me, how much remaining now? 9 minus 1.5 will be 8.5 or 7.5? 7.5. Okay, 7.5. So 7.5 CR he gave me back. Now tell me, he actually got 1 plus 1.5. 2.5 he got. And balance 7.5 I received back out of my 10 crores. So my actual expenditure, if you see, to buy his business I spent only 1, and to buy his goodwill I am saying that I have spent 9 CR, but actually 1.5 CR only is given extra to him. Now what will happen, in the bank entries, what entries will be there in the bank? I will say 10 CR given, 1 CR for business and 9 CR for goodwill. So in my books, no, now goodwill will be standing at 9 CR. But don't you think that out of this 9 CR, 7.5 I have already received and nobody knows? But in my books, I will always show 9 CR. The amount which is already returned back to me is also shown as cost in that 9. Getting my point? Which I will be claiming as depreciation. I am claiming the depreciation for that amount which I have not spent also, thereby reducing my business profits. So I am on a winning side only, no? If he would have agreed, I would have given him 15 CR also. I would have given him 20 CR also. The more amount I will give him, no, the more amount of goodwill I will get. And that is just an illusionary or imaginary goodwill, which is because of the transaction. But that transaction actually does not result into that goodwill, because in that transaction some cash is also involved, and in the form of cash I have taken back almost money which I have paid for goodwill. Yes or no? So this is a bogus amount shown for what? Goodwill, which I have not actually spent. But they cannot do anything because bank entries and everything showing what? 9 CR only paid for goodwill. So they have to give me the deduction for what? Depreciation on that goodwill. Because goodwill I have bought for the purpose of my business or profession. For my business, I have acquired his business, and along with his business, I have acquired the goodwill also. So that goodwill is now going to be used in my business. So on that goodwill, I need the depreciation, and I used to claim the depreciation on that 9 CR. Whereas I have spent only 1.5 CR extra. Getting my point? And now don't you think I have paid 1.5 CR extra to Kaushik? Why? Because he is selling his business. Along with his business, he is selling what? Goodwill of his business, which was self-generated, which costed him nothing. And for that goodwill, he is getting how much? 9 CR. Getting my point? 9 CR will be his capital gain. 9 CR will be his capital gain. He will be charged capital gain tax on that 9 CR. And right now the rate is 12.5% on the long term gain. Calculate 12.5, 9 into 12.5%. 1.125 CR will be the tax. But I have paid him 1.5 CR. Still is getting some extra, no? So he will be happy that whatever tax which he has to pay, that amount I have already given him extra, no? From that amount he is going to pay his tax also. And his black also got converted into white. Getting my point? And now I am also claiming what? Depreciation on the goodwill. Who is on the losing side over here? Tell me. Ultimately the government is losing the money, no? Now what will happen? The cost which I have not incurred only, that cost I am claiming in the form of depreciation. Goodwill in the form of depreciation. So they came to know that the assessees are doing such kind of malpractices. Yes or no? So they said, with effect from 1st April 2020, whatever goodwill you have already acquired, on that also no more depreciation will be allowed. And from now onwards, whatever goodwill you will acquire, on that also no depreciation will be allowed. Goodwill does not qualify as a specified asset anymore under the PGBP head. The entire cost which you incurred minus the depreciation which you have claimed so far, meaning the WDV, remaining cost, yes or no, will no more be allowed as a depreciation if the goodwill was acquired prior to 1st April 20. And if the goodwill is acquired on or after 1st April 20, whatever cost you have incurred, that entire cost will never be allowed as a depreciation under PGBP Act. Forget about that. So can I say, if I talk about goodwill, if I talk about what? Goodwill, so that goodwill was acquired prior to 1st April 2020, or it can be acquired on or after 1st April 2020. So any goodwill which was acquired prior to 1st April 2020, whatever cost which was incurred on that goodwill, whatever cost, actual cost which was incurred on that goodwill, out of that actual cost, some depreciation would have been already allowed, no? Depreciation already allowed. So there will be WDV, that is the remaining actual cost, as on 31st March 2020. That is nothing but the remaining cost of that goodwill. So for example, you acquired goodwill in the year 1920, not 1920, 1819. In the year 1819, you acquired goodwill. That means you acquired goodwill prior to 1st April 20. That time it was a specified asset. That time you used to get the depreciation also. And the rate of depreciation on intangible asset was 25%. It is 25%. Yes or no? So you acquired the goodwill for how much? Example, you acquired it for 1 CR. 1 CR minus 20%. First year depreciation for 1819. 20 lakhs. Then 80 lakhs remaining. On that 80 lakhs also you would have claimed the depreciation in the second year, 1920, amounting to rupees 16 lakhs. 80 lakh into, not 16 lakhs, 80 lakh into 25%. 80 lakh into 25%. How much? Wait. Some calculation mistake from my end. Sorry. 1 crore. 1 crore into 25%. First year depreciation will be 25 lakhs. First year depreciation will be 25 lakhs. Then in the year 1920, second year, in that year also I would have claimed the depreciation on 75 lakhs, 25%. 75 into 25% will be 18.75. So 18.75 is the depreciation for the second year, 1920, and 25 lakhs was the depreciation for the first year, 1819. How much total depreciation? 43.75. So out of 1 CR, 43 lakh 75,000 was already allowed to you in the form of depreciation till 31st March 20. Yes or no? So how much still remains? 1 CR minus 56.25. So can I say that 56.25 out of the 1 CR cost, still this much cost remains? This will no more be allowed as a depreciation. Forget about this also. Now this WDV which is remaining now as on 31st March 2020, forget about this cost. This is not going to be allowed under the PGBP head in the form of depreciation. Bring this to capital gains. Take it to capital gains. And also the goodwill which you have acquired on or after 1st April 2020. Any actual cost which you have incurred to acquire that goodwill will no more be allowed as a depreciation. So take this entire actual cost to capital gains. Whenever you will sell the goodwill, now in future, at that time, either the remaining cost or the actual cost will be allowed as a deduction in the capital gains and not under PGBP anymore. And see, that time, nobody is going to buy that goodwill from me because goodwill was not there only. I'll not be able to take the deduction for this cost. because to get the deduction of this cost, I need to sell the goodwill also. I'll not be able to sell it because goodwill did not exist only, for which I have paid this much. So this amount I was claiming as what? Depreciation over here. This they have disallowed. Will you remember this part? So in capital gain, no, this part will come. Okay, that time I will tell you that this is already explained while doing PGBP. Sure. Now in your business, which other assets you can use? Can you use intangible assets? Yes. Other than goodwill, all the intangible assets are specified. On them, you can claim depreciation. So the cost of intangible assets will be ignored, but that cost of intangible assets will be allowed in the form of depreciation. But the intangible asset should not be a goodwill. Yes or no? Now, can you use tangible assets in your business? Tangible assets. What type of tangible assets you can use? Come on, tell me. Can you use land? Yes. Can you use building? Yes. Can you use furniture and fittings? Yes. Can you use other assets? All other assets are known as plant and machinery. So if you are having land, can you acquire a land for the purpose of your business or profession? Yes or no? But don't you think that it is not a depreciable asset? Land is an asset whose value appreciates. Then how are you able to claim the cost of land here in the form of depreciation? Forget about land. Land will not be allowed. The cost of land will not be allowed under PGBP head in the form of depreciation because land is not a depreciable asset, no? So whatever actual cost of this land will be there, hello, whatever actual cost of that land will be there, where you will take this actual cost? To the capital gain head. And where you will take this WDV and this actual cost? Under the capital gains head. This also capital gains. Sure. So whenever these assets are transferred in future, no, their capital gain will be calculated, and to calculate that capital gain, the cost will be this much only, which is not allowed here. Neither fully nor in the form of depreciation. This will be allowed under the head capital gains. Sure. Now which all assets remain? Come on, tell me. Intangible assets other than goodwill. Tangible assets other than land. And there also, building is eligible, furniture fittings eligible, here intangibles eligible, okay, and plant and machinery also eligible. Now wait, what do you mean by plant and machinery? Okay, so for that, no, for that they are saying that the term plant is defined. What they are defining? They are defining the term plant. So the definition of plant is given under section 43.3, if I'm not wrong. Yes, 43.3. Now, if you will see the definition of plant, no, the term plant includes what? Ships, books, then it includes vehicles, scientific apparatus, surgical equipments. So the term plant includes these assets. And the term plant and machinery, the term plant does not include What did I say? It does not include number one, tea bushes. Tea bushes. Then what else? Animals, building furniture. Animals, buildings, furniture and fittings. Then two more, human body and stock in trade. Human body and its parts. And last one, stock in trade. These are also your assets. Are these your assets? First of all, many of them are living things, like human body and parts, like hands are there, brain is there, heart is there. They are what? Human body and its parts, not a plant. You cannot say that it is a plant and machinery used for the purpose of business or profession. And any expenditure you are incurring on them, you claim it in the form of what? Repair cost. You claim it in the form of depreciation. No, not possible. Human body and its parts are not asset itself. And if it is not asset only, not to be treated as plant also. Because in some professions, see, I'm a teacher. In my profession, I'm using my entire body, no? My heart, my mind, everything is used. My hands are being used. My entire body is used in my profession. Can I say? And to teach, I have to use my brain with my heart. Brain and heart combination. If a lawyer is there, in the profession of lawyer, heart and brain both are used. So he cannot say that the heart, brain, his human body, entire body is used as an asset in his business or profession. Neither I cannot say. Because if you want to consider something as an asset, no, number one, that should be a non-living thing. Number one, non-living, without life. Number two, you have acquired it by paying money. You have acquired it by paying money, and that money which you have paid to acquire it, you have capitalized that amount in your balance sheet also in the form of asset. Tell me, in my balance sheet which I would be making, will I show my mind, my heart as an asset over there? No. Why? Because it is not acquired by paying money. So it is not capitalized over there. So something which is not capitalized in my balance sheet, how that can be treated as what? Asset. And if it is not an asset, definitely it cannot be treated as a plant also. Getting my point? Hello, sir. So human body and its parts. Even the tea bushes, which are used in the tea gardens, tea gardens are there, the tea bushes are planted. From those tea bushes only, small tea leaves are plucked. And those tea leaves are further processed and tea is manufactured. That tea which is getting manufactured, it is manufactured from those tea leaves. And those tea leaves are coming from these tea bushes. Even the tea bushes are living beings. Even they have some life. But their useful life cannot be defined. No, for human body also, useful life cannot be defined. Because it is uncertain. Getting my point? And moreover, whatever amount you have spent on the tea bushes, no, those amount is of revenue nature. We already allow it as a deduction as your revenue expenditure. Then why are you treating them as what? your asset. Don't treat them as your asset. Getting my point? And if they are not your assets, they cannot be treated as plant also. See, if you have furniture no or building no, that is not a plant. Forget it. Furniture and building is not a plant. So anything other than furniture and building is plant. But that should not be human body and its parts. That should not be animals. That should not be tea bushes. That should not even be stock in trade also. Because see, for tea bushes, whatever amount which you will spend to acquire the tea bushes, that amount is already allowed to you in the form of revenue expenditure. Whatever amount you will incur to acquire stock in trade, even that amount will be allowed as a deduction in the form of revenue expenditure. This is the purchase price of the goods which you are selling. So that purchase price is nothing but the value of that stock in trade which we are already allowing in the form of purchase cost. Yes or no? Revenue expenditure. So why are you considering this stock in trade as the asset used in business? This is not asset used in business. This is itself something in which you are dealing into. Buying, selling, buying, selling. Selling you are getting money, buying you are incurring cost. That cost we are allowing as revenue expenditure, no? So even that will not be treated as plant because its entire cost we are allowing in the form of revenue expenditure. Tea bushes, entire cost incurred on the tea bushes we are allowing you as revenue expenditure. Forget about animals. Animals can never be treated. Forget about human body and its part. It can never be treated as plant. Getting my point? So human body, animals, they are never treated as plant. So something which is not a furniture, not a building, will be plant and machinery, will be plant. But that should not be tea bushes. That should not be human body and its parts. That should not be stock in trade. Getting my point? But wait, if you will see ships, no, they are plant and machinery. If you will see books, no, they are plant and machinery. If you will see vehicles, no, they are also plant and machinery. And if you will see scientific apparatus, they are also plant and machinery. If you will see surgical equipments used by the doctors for surgery and all, yes or no, even they are plant and machinery. Meaning that any cost incurred by the assessee for these things, that cost will be allowed in the form of depreciation because they are treated as plant and machinery. Yes or no? So first of all, intangible assets can be there other than goodwill. Other than goodwill. All intangible assets are your specified asset. Any cost incurred on the intangible asset is a capital expenditure, will not be allowed as a deduction fully. It will be allowed in the form of depreciation. You can claim depreciation on intangible assets. Then tangible assets other than what? Land. Other than land. Whatever tangible assets are there. Those tangible assets can be furniture, fittings, buildings, and if not furniture fittings, they will be plant and machinery. So all those assets also, whatever cost you have incurred, no, that cost will not be allowed fully. That will be allowed in the form of depreciation in small parts. Claim their cost as what? Depreciation. But when you are trying to say, you are trying to understand that what is plant and machinery, the term plant is defined. In the term plant, furniture is not included, building is not included, everything else is included in the term plant and machinery. But remember, human body not included, tea bushes not included, then animals not included. Other than this, everything is plant and machinery. Even ships are plant and machinery. Books are plant and machinery. Vehicles are plant and machinery. Then scientific apparatus or surgical equipments are also plant and machinery used for the purpose of business or profession. Their cost will also be allowed in the form of depreciation. These are specified assets. Will you remember? Sure, everyone. But wait, all the assets, whether it is goodwill, whether it is land, whether it is other intangible asset, whether it is furniture, fitting, all these assets which are used in the business, no, they are capital assets. So when I will be doing the definition of capital asset under capital gains, no, you will come to know that all the assets, all types of assets, any type of asset is a capital asset only. May or may not be used for business. So even the assets which are being used for the purpose of business, no, all these assets are also capital asset. But out of these capital assets, no, only goodwill and land will go to capital gains. Only their capital gain will be calculated. Only their cost will be allowed under capital gains while calculating the capital gains. Yes or no? But for other capital assets, meaning the other assets of the business which are capital asset, their cost is not going to go to capital gain. Why? Because their cost is incurred to earn business income. So the cost, the asset which will allow you to help your business income, the cost of that asset should be allowed as a deduction from the business income only, no? But in the form of depreciation. You have not acquired these assets with an intention that the value should appreciate. No. You have acquired these assets with an intention to be used to generate your business income. So any cost incurred on these assets is a cost incurred to generate business income. So that cost should be allowed as a deduction from the business income only, no? Hence these assets will not go to capital gain. These assets will remain here only. Even if they are capital assets, but they will remain under PGBP head only. Their cost will be allowed as a deduction from the income of the business only, because this cost is incurred to earn business income. Got it? Should I move ahead? First condition, asset should be specified. Done. Second condition. What is the second condition? Come on, tell me. Assessee should be the owner of above specified assets. Owner means what? Which type of owner? Owner means legal owner. Owner means which type of assets? Which type of owner? Legal owner. Sir, if you are the legal owner of the asset, no. Meaning that from your pocket you have spent money to acquire the asset, and hence as a result of that you became the legal owner. So the person who is the legal owner of the asset, that person himself has incurred the cost of that asset. That is the reason why that he is legal owner. You will incur 10 lakh on the asset. Then the legal ownership will asset come to you, no. Legal ownership of the asset comes to you means that the cost is incurred by you only, no. So the person who has incurred the cost is the legal owner of the asset. That person who has incurred the cost is the legal owner of the asset. That person only should get the cost in the form of depreciation, no? Hello, sir. So this legal owner has incurred the actual cost, meaning the capital expenditure. So that legal owner will only be eligible to claim what? That cost in the form of depreciation. Hence, it is required that if you want to claim the cost of any asset as what? Depreciation, you must be the legal owner of that asset. Only then you have incurred that cost which you can claim as what? Depreciation. But sometimes no, you are the owner of the asset, legal owner. No, sometimes you will be made the beneficial owner. What type of owner? Beneficial owner of the asset. See, beneficial owner of the asset is a person who is not the legal owner of the asset yet. Who is not the legal owner of the asset yet. But this poor fellow has only incurred the cost. This poor fellow has only incurred the cost. Sir, what do you mean by this? What do you mean by this? Merely the documents, title deeds or registration deeds are not registered on your name, but the cost is incurred by you only. See, when you buy some asset, no, in your books of accounts, what entry you usually pass? If you are a legal owner, no, if you are a legal owner, so you would have passed the entry asset account debit to what? To cash or bank account. Yes or no? So this much cost you have incurred and you have brought the asset in your books. So whatever cost you have incurred on the asset, that cost you claim in the form of depreciation. You now become what? The legal owner. Yes or no? But sometimes, no, sometimes, even though you incur the cost, but you don't become the legal owner. So don't worry, even if you are not the legal owner, we will consider you as what? We will consider you as a beneficial owner. Even if you are not the legal owner, we will consider you as beneficial owner if you have only incurred what? The cost of that asset. So your name is not written on the asset, but the cost is incurred by you only. How come, sir? Asset is bought on loan. Asset is bought on hire purchase. For these assets, what will happen? Are you going to incur the entire cost? Yes. Will the asset belong to you? Yes. Are you going to use that asset for your business or profession? Yes. Are you going to incur the entire cost? Yes, but not right now entirely. Some part of the cost you will meet right now in the form of down payment. Hello? And the balance part of the cost you are going to meet in small installments, hire purchase. Hello? But that entire cost of the asset is met by you only, no? Do you bring that asset in your balance sheet? Yes, definitely you pass that entry, asset account debit to cash bank, the down payment which you are making right now, and to hire purchase loan. Getting my point? So that hire purchase loan is shown as a liability. So against that asset, some cost is shown as your liability and some cost you have already paid. The entire cost you are only going to pay, no? But you are not the legal owner right now. You will become the legal owner when you will pay the last installment. So till that time, you won't claim depreciation. You should not get depreciation. You only should get the depreciation. But you will get that depreciation as you are the beneficial owner of the asset. Mysore Minerals Supreme High Court judgment. Even though the asset is not legally registered on the name of the assessee, but if the cost of that asset is met by the, or the liability towards the cost is taken by the assessee, which is going to meet only, hello, then that cost should be allowed to him only in the form of depreciation. The depreciation claim cannot be denied just because he is not the legal owner. In that case, he will be treated as a beneficial owner and the claim of depreciation for that entire cost will be available to him only, considering him as beneficial owner till the time he does not become the legal owner. Getting my point? So the best example is hire purchase. So in the case of hire purchase. In the case of hire purchase, best example, the assessee becomes the beneficial owner and he becomes the legal owner on the payment of last installment of hire purchase. Yes or no? So that time he will not get the depreciation. He start getting the depreciation right away the moment he has bought. Got it, sir? What entry he is going to pass? Same entry he is going to pass. But instead of making the entire cost payment right now, he'll pay some cost in the form of down payment and the balance cost he is going to pay by way of what? Loan repayment. Getting my point? So, asset account debit to cash or bank for down payment and to hire purchase loan account. So whatever the cost will be there of this asset, the assessee only meeting, no? So that cost should be allowed to him only in the form of depreciation by treating him what? Beneficial owner. Will you remember this? So only the legal owner will get the depreciation? Yes. Always the legal owner will get the depreciation. But in some exceptional cases, if you are treated as beneficial owner, then you also can claim the depreciation. And one of those exceptional cases is what? Hire purchase. See, when you buy some vehicle on loan, right? For my business, I bought one truck. I bought that truck for the transportation of goods in my business. Okay. The cost of that truck was 50 lakh rupees. I could not pay the entire 50 lakhs right away. So I paid only 10 lakh rupees as cost. And the balance 40 lakhs, I took a loan from the bank. I took a loan from the bank. I told the bank that I want to buy that truck. The cost of that truck is how much? 50 lakhs. I'm paying 10 lakh right now. You pay the balance 40 lakhs to the truck vendor so that I can get a truck for 50 lakhs. Okay. Now don't worry. The 40 lakhs which you have paid on my behalf, no, is my loan only. That I'll keep on paying you in small parts along with what? Interest. So the balance 40 lakhs of that cost of that truck is going to be paid by me only, no? But I'm not going to pay directly to the vendor because the bank has paid directly to the vendor. Now that 40 lakhs I'm going to return to the bank only who has provided that loan. Getting my point? But wait, bank will pay that 40 lakhs to the truck vendor and the truck will not be registered on my name. In my RC book, no. In my RC book, my name will not be as a registered owner. In the name column, it will be written that the truck belongs to me, but it is hypothecated to HDFC Bank, who has financed the cost. So till the time I am not repaying the entire cost to the bank, entire loan to the bank, and the bank is not giving me what? NOC, no objection certificate, which I will later on submit to whom? The RTO. And only then the RTO will remove the hypothecation and put my name as the registered owner. Till that time, I am the beneficial owner. I can claim the depreciation. Yes or no? It is merely, have you heard about the fact that substance over form is a principle in accounting? What you see is not what it is. You see something else, but whatever is, you cannot see also. So substance over form. What is the substance? The cost is made by you only, no? You claim that cost in the form of depreciation, even though you are not the legal owner. Form is what? You are not the legal owner. But substance is, the cost is made by you. You claim it as a depreciation. Treat yourself as what? Beneficial owner. Mysore Minerals. Case law I have discussed with you. Will you remember? Sure. Now, see, the second condition is done. The assessee must be the owner. Assessee must be the owner. Now pay attention. Assessee must be the owner, no? So one more case I will tell you over here. See, this is Mr. A. He is the owner of the asset and he has incurred the cost of asset 10 lakh rupees. Okay. Now Mr. A is giving his asset given on lease. This asset whose cost was what? 10 lakhs. That asset was given on lease to Mr. B. Right? And B uses the asset for his business or profession. So the asset which is taken by B is used by B in his business or profession. But he is not the owner of the asset. He is just the user of the asset. But he is using that asset in his business or profession. Yes or no? Mr. A, who happens to be the owner of the asset, is not keeping the asset with himself. He is giving that asset away to someone else. So if giving the asset on lease to someone else is not the business of the assessee, is not the business of Mr. A, tell me, when the asset will be given on lease, Mr. B will give what? Mr. B will give rent, yes or no? That rent will be taxable as income from other sources for Mr. A. Getting my point? Why? Because Mr. A is not in the business of giving the asset on lease. He has one asset, he has given that asset on lease to Mr. B casually because he was not using that asset. So instead of keeping that asset idle, he thought that let us give this asset on lease to someone else. The best example I'll give you for myself only. I bought one camera, Sony camera, you know. The cost of that camera was 2 lakh rupees. 2 lakh rupees cost I incurred. So instead of Mr. A, keep Umang sir. Umang sir has bought a camera and the cost of that camera is 2 lakhs. Now that camera was lying with me. I was not using that camera. I thought that I will do some photography, nature photography, this, that. Okay, I'll go to travel. I'll become a travel blogger and all. So I will do some photography and all. But I could not do it somehow. So that camera was not used by me at all. That camera I gave to one of my friends, Mr. B, who is a photographer. For him, photography is his business, and in his photography business, he will be using my camera. And for that, my friend is paying me rent. Now tell me, my business is not to give such cameras on rent and earn rental income. This rental income is not a PGBP income for me. Why? Because renting the camera is not my business. This is my other income, income from other sources. Whose income is this? My only, no. If I am showing the income of that asset as my income, but under the head IFOS, I am the only person who is going to get the deduction of the cost of that asset in the form of depreciation. Even though the asset is not used by me in my business or profession. Hello. Even if the asset is not used by me in my business or profession, still the cost of that asset will be allowed to me only in the form of depreciation under the head IFOS now. Where the income of this asset I am taking? IFRS. So where the cost should be allowed for this asset? IFRS, but in the form of depreciation. But it will be allowed to me only. The person who has incurred the cost will only be claiming the depreciation for that cost. Getting my point? So when I take this rent under the head IFOS, from that IFOS income, I am going to claim deduction. Deduction for depreciation. Deduction under section 57. Deduction under section 57. All the expenses and depreciation are allowed under IFOS under the same section 57 only. Yes or no? So all the expenses of this asset, expenses of the asset and depreciation on such asset will be claimed by me under section 57 out of that income of that asset which I am taxing under the head IFRS. Even if Mr. B is using for his own business or profession, B cannot claim the cost as a depreciation. Why? Because B has not incurred that cost. Who has incurred the cost? A. So A is only going to claim that cost in the form of depreciation. But now A is not going to claim it under PGBP because A is not using the asset for his business or profession. But the income of the asset is getting taxed under the IFRS, no? So the cost of this asset will be allowed as a depreciation from that income only which is getting taxed under IFRS. Got it, sir? But what if my business is to give cameras and lenses on rent? So now don't you think that this camera, this asset is used by me in my business of renting the cameras? So now the rent of that camera will not be taxable under the head IFRS. Now that rent will be taxable for me under the head PGBP only. And the asset is used in my renting business. Hello? So on that asset, whatever cost I have incurred, I will be claiming as a deduction in the form of depreciation under the PGBP head only because the asset is being used in my business, renting business. Getting my point, everyone? Sure. So if giving the asset on lease is not the business of the assessee, then whatever income from that asset will come will go to IFRS. And from that income only, the assessee, meaning the owner, is going to claim the depreciation. But if the same thing I copy, pay attention, and I paste here. Same thing I copy and paste. But what I'll say, now it is my business to give such assets on lease. So whatever rent I am getting by leasing that asset, now that will be taxable as my PGBP. Understanding? Now this rent will be my PGBP income because my business is to give the assets on rent and earning this rent. So this rental income is my PGBP income. Now from this rental income only, I am going to claim the deduction under section 32. Expenses of the asset under section 30 or 31 or other sections and depreciation under section 32. Because income of this asset is shown under PGBP, so expenses as well as depreciation of these assets will be claimed by the owner only under the PGBP. The cost of that asset will be claimed by the owner only. Always the person who has incurred the cost will claim that cost as what? Depreciation, either under PGBP or under the head IFOS. Nobody else can claim that cost in the form of depreciation. Will you remember? So, being the owner of the asset is this much important. Just imagine. Got it, sir? Everyone? Now, Perfect, done. Now they are saying that the asset must be used for the purpose of your business or profession. No. So third condition is asset must be used for the purpose of business or profession. For the purpose of business or profession, it must be used. Used must be. Use must be actual use. Actual use. See, in my teaching profession, I am using this pen. I am using my iPad. I am using this camera. I am using this computer. I am using this keyboard. I am using this mouse. I am using this table. I am using this chair. They are in actual use. Active use. Getting my point? I am using the hard disk also to save my recorded lectures. Got it? No? So all the assets are actively used in my business to generate my business income. If the assets are used to generate your business income, only then from that income, the cost of that asset can be claimed as a depreciation. If the asset is not used in the business, is the asset helping to earn the income? No. Then why the cost of this asset should be allowed from that income? If the asset is used in the business to earn the business income, so the asset is helping to earn that business income, no? So the cost of that asset should be allowed as depreciation from that business income because it is used in that business to earn that business income. But what if the asset is not used in the business? If the asset is not used in the business, so to earn this income, this asset is not helping. This asset is not helping to earn this business income. So how the cost of that asset you want to claim as a depreciation from this income? It will not be allowed. Getting my point? To claim the cost from the business income in the form of depreciation, this asset should help you to earn that income. It will be helping you to earn that income only if it is put to use, only if it is used actually in that business. Yes or no? Hence, the use of that asset in the business is very important. Logics. Sometimes, no, asset is not actually used. Asset is not in active use. Actual use means what? Active use. Actively used in the business. But sometimes it is used passively. So the use of the asset is passive. See, I'll give you my example. Laptop is used actively. Pad, camera, everything is used actively. I know that, boss, this camera is very critical for my recordings. God forbid, if this camera stops working, I will have to rush to buy a new camera. And such type of camera, if ordered also no online, it will take at least 5-6 days to come. Getting my point? So for 5-6 days, my business will stop, no? My business activities will stop, no? Because without this camera, I will not be able to deliver my lectures. Or for example, this iPad has stopped working. Or this pen has stopped working. See, this is a very small thing, okay, no? But in order to write on this iPad, this is required. I am actively using it. But what if all of a sudden it stops? It falls down, it breaks. Now I will not be able to use this pen and iPad without this pen. I will not be able to deliver my lectures. without writing. So what I've done, extra pen like this, I have bought only. And I have kept that whenever, God forbid, if something happens with this pen, no, immediately that pen I can take and start using so that my activities do not stop. So the pen which I have bought is not actively used, but it is kept ready for its intended use. The moment the need will arise, it will immediately be put to use. It is in passive use. One more example. You might have seen that in big factories, etc., those big red bottles are there, filled with carbon dioxide. Red big cylinders are there. Fire extinguishers. You must have heard. You must have seen also. They are not actively used. Every day the fire is late. They are used. No, active use should be there. Only then the depreciation. No. Actually, everyday fires are not extinguished with this fire extinguisher. But whenever there will be a fire, are these ready to put off that fire? Yes. Ready for its intended use. They are not in active use, but they are in passive use. Getting my point? So even the assets which are not actively used in the business, which are passively used, which are kept ready for their intended use, for those assets also the depreciation is available. So for actively used asset as well as passively used asset, for both the assets, the depreciation can be claimed as deduction. Done? Will you remember this? Now pay attention. Very important thing I am going to discuss with you. See, in my previous year, no, 24-25. Okay. In this year, on 10th of September 2024, asset was acquired. So can I say the asset which was acquired on 10th of September 2024, I started using that asset immediately, for example. I started using that asset from that same day. Okay. So from 10th of September to 31st March 2025, the asset will be used. Can you calculate the number of days? 21 days of September. Because from 10th, it is used in the business. So first 9 days could not be used. Right now. So out of 30 days of September, reduce 9 days. Out of 30 days of September, if you reduce 9 days, you will get 21 days. So 21 days used in September. Then October, then November, then December, then January, then February, then March. You will get 203 days. So the asset was used in my business for how many days? 203 days. So the depreciation calculation, computation will happen for how many days? 203 days. Starting from 10th of September to 31st March. Let's take one more example. During the previous year 24-25, the asset was sold on 12th of August 2024. So can I say the asset which was already there in my business since the beginning, from 1st April 2024, that asset was used in my business since the beginning, but that asset I sold on 12th of August 2024. So can I say 1st April to 12th August will be April, May, June, July and August 12. Can I say 134 days the asset was used? So the depreciation calculation will happen for 134 days. Sure. You do this in accounting. Are we doing accounting or tax? Whenever you will calculate depreciation, what did I say? Whenever you will calculate the depreciation, compute the amount of depreciation, the calculation will not happen for number of days. No, no, no. Never. Depreciation calculation under the Income Tax Act always, always, always full year. Depreciation calculation always, always, always full year. We are not going to calculate the depreciation for number of days used, number of months used. No, the depreciation calculation will happen for the full year. So if I say that under the Income Tax Act, (1961), under the head PGBP, calculation of depreciation shall always be for what? Full year. This calculation cannot be done for number of days or months use of the asset. It is immaterial that how many days you are using the asset. Calculation will happen for the full year. Yes or no? So into 203 divided by 365 into 134 divide. No. Calculate the depreciation at the applicable rate for the full year. So what did they say? The calculation of the depreciation shall always be for full year at the given full rate. Yes or no? At full rate which will be prescribed. So there are depreciation rates which are prescribed. Okay, no? So apply that rate. By applying that rate, and the method will also be told. Yes or no? You don't apply your mind. We are there to do that. The government is saying, the lawmakers are saying, don't apply your mind. No. Do whatever you want to do in accounting. Not here. Here we will tell you that you have to do. Calculation will be done for the full year. Method which will you take? We will tell you. That method you have to take. WDV or SLM, that we are going to tell you. What rate of depreciation you will take? You are not supposed to apply your mind. No. In accounting, whatever rate you might be taking, whatever method you might be taking, you might be calculating for some months, some days. Yes or no? Here, always full year. The rate we will prescribe. Apply that full rate. And the method also we will prescribe. Apply that method. And calculate the depreciation for the full year and claim that depreciation for full year. We will allow you the depreciation for full year. That's it. But there is one exception. What did I say? One exception. Where the depreciation will not be calculated at full rate, it will be calculated at half rate. But still the depreciation will be calculated for the full year only. Huh? Depreciation calculation can never happen for days or it can never happen for months in PGBP. It will always happen for full year. Either at the rate which is given or at half of that rate given. At the most, the rate can be half. but the depreciation will be calculated for the full year only. Hello, sir. So there is one exception. What did I say? One exception. In that one exception, what is going to happen, friends? Depreciation calculation shall be for full year or half year. Come on, tell me. Full year or half year? It will always be for full year. Depreciation calculation will be for full year. But it will be at half of the applicable rate. Half rate. So the rate which you have taken here, the rate which was prescribed, don't apply that full rate, take the half rate, but calculate the depreciation for the full year only. If you'll ask this thing to someone else, other friends, etc., they will tell you that the depreciation is calculated for half year. They have the habit of saying calculation of depreciation half year, calculation of depreciation half year. Laugh and go away from there. Depreciation is never calculated for half year. It's always calculated for full year. Half is rate and not the year. And this exception will arise. This exception will arise in the first year in which asset was acquired. And in that same year, what did I say? The year in which the asset was acquired. In that same year, if asset was put to use for a period of less than 180 days, only then in that first year, the depreciation will be calculated for full year but at half rate. So this restriction is applicable only in the case of calculating the depreciation on the asset for the first year. So in the first year, the year in which the asset was acquired, in that same year, if the asset is put to use for a period of less than 180 days, then for that first year, the depreciation can be calculated for full year, but it will be calculated at half of the applicable rate. Hello, sir. But what if then in that first year, the asset was put to use for a period of 180 days or more? Then full year depreciation at full rate. Got it, sir? Understood? All the other cases, except this case, all the other cases, full year, full rate. Full year, full rate. No need to do the calculation for number of days. No need to do the calculation for number of months. See, your income tax department, meaning your law, income tax law is very kind. They are trying to avoid the problems which might happen later on. Just imagine if you are one assessee buying only one asset during the year. So for you, even if you calculate the depreciation for number of months, number of days, will not be that much difficult. But just imagine about a company who buys and sells thousands of assets during the year, like Reliance is there, Tata is there. So they must be calculating their depreciation based on the number of months, based on the number of days. They would be claiming that depreciation as a deduction. But later on, the government, the department will also have to verify, whether the depreciation which they have calculated is okay or not. So for that, they will have to take exact proper date of purchases, date of sale, every damn single small minute details they will be asking from you. Don't you think it will be an harassment to you? And as well as their workload will also increase, no? So why to make the things complicated if the things can be easy? We are going to give you the cost as what? Deduction, no? So take that cost as a deduction in the form of depreciation, but calculate this depreciation for the full year. at full rate, which we are going to tell you. Don't calculate for number of days, number of months. Yes or no? Because the calculation does not depend on number of months use, number of days use. Calculation will always be for full year. Getting my point? Either it will be at full rate or it will be at half rate. Always at full rate. But in one exceptional case, the calculation will happen for the full year, the calculation will happen at half rate in the first year in which the asset was acquired. The first year in which the asset was acquired, in that same year, first year only the asset was put to use for less than 180 days. The depreciation for that first year cannot be calculated at full rate, it will be calculated at half rate only. Sure, no? So I'll put some examples in front of you. Will you be able to answer me? Sure, no? Perfect, very good. Okay, see, first example. Previous year 24-25. In this previous year, asset is also acquired in this previous year, and that same asset which was acquired in this year, it was put to use in that same year. Okay, no? So asset was acquired, for example, it was acquired on 19th of May 2024. Possible or not? Now, if nothing is mentioned in the question, no, we will always assume that the date on which the asset was acquired, the asset was also put to use immediately on the same date. But sometimes it is not possible to put the asset to use on the same date because, see, installation, erection, etc. is required. Yes or no? Sometimes the machines are very big machines, so the installation will take place. Installation is a time consuming process. After the installation, trial run will happen. Then when the asset will start functioning properly, then it will be actually put to use. It might take some time also. Yes or no? So you bought the asset in this year, but unfortunately it took some time for you to put the asset to its actual use. So asset got actually put to use on 29th of September 2024. Possible or not? So these many months, the installation, erection, everything was going on. Trial run, this, that, it was going on. And then finally, the production started with this asset on 29th September. Actually, it was put to use on 29th September. Now tell me, you have to check whether this asset was put to use for 180 days or more or less than 180 days. So you will count the number of days, 180 days, from date of acquisition or date when it was put to use. Put to use. So for us, this date will be relevant. Whenever we will be counting the number of days, we have to always see the date when the asset was put to use. Yes or no? So if it was put to use on 29 September, so can I say 29 September to 31st March 2025? How many days? 2 days of September, 29 and 30, 2 days. September, 2 days. October, November, December, January, February, and then one more month, no? March. And March. Tell me how many days? Exact number of days. 184 days. So first question, asset purchased in 24-25? Yes. Is it the first year of the asset? Yes. In that same year, the asset is put to use? Yes. Is it put to use for less than 180 days? Or 180 days or more? So on this asset, calculate depreciation for 24-25 for full year at what? Full rate also. Depreciation will always be for full year. And now the depreciation will be for full year. It will be at full rate also. Whatever rate was prescribed, apply that full rate. Done, sir. Easy or difficult? Easy, no? One more example I'll take. Let's take another example 2. Example 2, no? What I'll do? I'll take the same example, okay? Same example. Copy and then I will paste in the next page. I'll just change the color. Come on. Let's take blue color now. Now what all things I'm changing, please check, huh? Possible or not possible? So now tell me how many days the asset was put to use. Exact 72 days you are getting? Sure? September how many days? After 18, 12 days. 13 days. 18 days of September gone. So 30 minus 18 will be 12 days of September you are going to use. From 19th till 30th September. From 19th till 20th September. So you'll have to reduce 18 days, no, from 30. So 30 minus 18 will give you 12 days, September. October 31. November, sorry, January, no, this is January, my mistake. So 31 days of January. 31 minus 18 will give you 13 days. 13 days of January plus February 28 and March 31. It will give you 72 days. Everyone getting this, no? Okay, perfect. So 72 days is less than 180. Can I say asset was purchased in 24-25? In that same year in which it was purchased, it was put to use also, but it was put to use for a period of less than 180 days. Now the depreciation on this asset will be calculated for 24-25 for full year, but it will be at half rate. Or I can say apply the full rate but do 1/2. This is half rate. Got it, sir? Easy. Easy peasy. Sure, no? Pay attention now. One more example I will make. Ready? Ready? Same thing. See, I just change the color. Now green color. Come on. See, now asset was acquired. No, it was acquired on 19th of March 2025. Meaning 24-25 only the asset was acquired. 19th March 2025. But it was a huge plant and machinery, and its installation and erection took a lot of time. Okay. What happened? It was put to use on 4th October 2025. Okay. So from 4th October 25 till 31st March 2026. For how much time the asset was used? Now tell me. For the previous year 24-25, depreciation calculation will be for full year at full rate or half rate? Full rate or half rate? No depreciation only for the first year. Because the year in which you have acquired 24-25, on what date you have acquired? So from this till 31st March 2025, the asset was not put to use. Not put to use at all. So the year in which the asset was acquired, the first year in which the asset was acquired, that year the asset was not put to use only. So friends, for previous year 24-25, for the previous year 24-25, you will not get any depreciation. Because to get the depreciation in that year, the asset should be used in that year. Is it used or not used? Not used at all. Yes or no? Now tell me, previous year 25-26, the asset was put to use? Yes. Now this year depreciation will be calculated. Now tell me, depreciation for full year at full rate or half rate? 24-25, no depreciation will be given. Why? Because the asset was not used at all. 25-26, depreciation will be calculated because the asset was put to use. Yes or no? But the depreciation will be calculated for full year. But it is calculated at full rate or half rate? Half rate. You guys have drunk or what? Is 25-26 the first year? The year in which the asset is acquired? They will deliberately do this thing with you. The year in which the asset is acquired, first year, if in that year the asset is put to use for less than 180 days, only then that exception will be applicable. Only then the rate will be half. First year asset is not used only. No depreciation at all. And in all the other case, the rate of depreciation will always be taken as full. So the second year, 25-26, is not the year in which the asset is acquired. So why are you even counting the days for those? They will be deliberately giving you such type of details. There is no need to count the number of days also now. Now whenever it will be put to, even if it will be used for a single day also, no, in 25-26, still you will get the depreciation for the full year and at the full rate. Now you are not supposed to check the number of days used. You will check that only in the first year, the year in which the asset was acquired. So the year in which the asset was acquired, in that year there was no use, so there was no depreciation. But the next year the asset was used, so even if it is used for 180 days, less than 180 days, more than 180 days, will not make any difference because that is not the year of purchase. That is the second year of the asset. This year, asset is not a new asset. It's already the second year of the asset in the business. So if the depreciation will be calculated, it will be for full year and at full rate. Now you understand where you commit mistakes in the exams. You think that you have done everything correctly, you should get the marks, but you don't get the marks. What is the reason? These small things you don't pay attention. Got it, sir? Now will you commit this type of error? In the examination, no, depreciation adjustment will be given. Now what they will say, that you already had some assets earlier, which you have bought from earlier. Now those assets are also used in the business in this year. But they are used in this year for a period of less than 180 days. They will deliberately tell you the assets which were already there with you, meaning these assets you have already bought in some earlier year. Now, if that asset you are using in the business in the current year is not the year in which these assets are bought. Okay, no? So, even if these assets are used for a period of less than 180 days in the current year, no? Still the depreciation rate will not become half, it will be full only. They are deliberately giving you that information so that you take the depreciation at half rate. Getting my point? So write down the restriction, the restriction of taking depreciation at half rate, the restriction of taking depreciation at half rate will be applicable only in the first year that is the year in which the asset was acquired. If in that same year, if in that same year the asset was put to use for a period of less than 180 days. If in that same previous year the asset was put to use for a period of less than 180 days. Please mark this point, very, very, very important. Got it, sir? So now, see, I will give you one trick. You will not have to count the number of days. Automatically, you will come to know that whether the asset is used for 180 days or more or it is used for less than 180. See, if the asset is acquired in previous year 24-25, so now this is the first year in which the asset is acquired. Now if you want to say that in this year on that asset the depreciation will be allowed at full rate or half rate, so you will have to check that in that same year for how many days the asset was put to use, yes or no. So you'll have to count the number of days. Hello? Which is a very cumbersome process. I'll give you one shortcut. You will not have to count the days also. By looking at the date only, you will come to know that this is less than or more than. Getting my point? See, if the asset is acquired in previous year 24-25, okay. So in previous year 24-25 only, in and in previous year 24-25 only, it was put to what? Use, no? Will you remember this date? Hmm? This is my birthday. I'm just 2 years younger than Gandhiji. My birthday, actual birthday, seriously. So sir's birthday, 4th October. On that day, the asset is put to use. Or after that, the asset is put to use. It will be used for less than 180 days. check. 4th October put to use. So from 4th to 31st, how much? 179 days. What if you put to use on 5th? This 179 will become 178. What if you put to use on 6th? It will become 177. What if you put to use on 7th? It will become 176 days. Getting my point? 4th, 179. 4th to 31st, it will be 179. After 4th also, it will be less than 180. Yes or no? So you have to put to use prior to 4th October. Meaning if you will put to use on 3rd, 1 day will increase. It will become 180. If you will put to use on what day? 2nd, it will become 181. So any day which is before 4th October, on that, if you will put to use, you will be able to use it for 180 days or more. But on 4th of October, you will put to use, or any day after 4th of October, you will put to use. You will be able to use it for less than 180 days only. Now, my birthday, you are not going to forget in your entire life. Sir's birthday or any day after that, put to use for less than 180 days. Any day before Sir's birthday. What is Sir's birthday? 4th of October. Hello, sir. So can I write down prior to 1st April 2010? What do I write down here? Greater than equal to 180 days use. And here less than 180 days use. So you are supposed to go and check in the question the date when the asset is put to use. If that date is my birthday or any day after that, put to use for less than 180 days. If that date is prior to my birthday, it will be 180 days or more. That's it. Will you remember this? Very good. Come on. These are the examples I've already told you. Done. Okay. Now calculation and claim of depreciation. We are going to continue this after the break. How the depreciation will be calculated and claimed. Now real provision, section 32, how the calculations will be done. Okay, no? See, calculation and claim of depreciation, meaning that all the three conditions as we have just now discussed, three conditions are fulfilled, then the actual cost of assets used for the business or profession. Which assets? Specified assets, which are used for the business or profession, of which you are the owner. Yes or no? Then the actual cost of that asset will be allowed as what? Depreciation. Now, if you want to claim this actual cost in the form of depreciation, you need to first fulfill these three conditions. You have fulfilled. Now, how this depreciation will be calculated and claimed? So, the calculation and the claim of depreciation is given in section 32. Which section? Section 32. So, under section 32, there is clause 1, there is clause 2, there is clause 2A, and there is clause 3. So the depreciation which you will be calculating and claiming will be normal depreciation. Which depreciation? Normal depreciation. Or it can be additional depreciation. Or it can be terminal depreciation. See, additional depreciation is not a new type of depreciation. It is a depreciation only, but allowed additionally. In addition to the normal depreciation, this much extra normal depreciation you will get. So some extra depreciation, extra normal depreciation allowed to you, that is known as additional normal depreciation. Yes or no? Terminal depreciation. See, this concept we will be doing with clause 1 only. Okay. So first we'll learn that how to calculate these depreciations. Okay, no? How to calculate and how these depreciation will be claimed and will be allowed. So as per section 32, subsection 1, clause 1, if you are an assessee, you can be any person. If you are an assessee, you can be any person, but you are engaged in any power business. Engaged in power business. Sir, what is power business, sir? Generation of electricity, distribution of electricity, transmission of electricity, generation, distribution, transmission of electricity. Electricity means power. So if you are an assessee who is engaged in what? Power business. So for this business, whatever assets you will acquire, take the actual cost of individual asset acquired for this business. Yes or no? So every asset which you will acquire for this business, every asset, every individual asset, whatever is the actual cost of that individual asset, on the actual cost of that individual asset, you will apply the rates of depreciation. The rates of depreciation which are prescribed in Appendix 1A to Rule 51A. So on every asset, every different type of asset, different rate of depreciation is prescribed. And where it is prescribed? It is prescribed in Appendix 1A to Rule 51A. So you'll have to go to income tax rules now. In the income tax rules, you will see Rule 5, Subrule 1A. In that rule, there is one appendix 1A given. In that appendix means table. Appendix does not mean this, which pains, you know. No, not that appendix. Appendix means a table. In that table, the name of different assets which can be bought and used for power business, the name of all those assets are given. So list of all those assets is given. You have to check that which asset you have acquired for your power business. Against that asset name, the rate of depreciation will be prescribed. Yes or no? Take that rate, apply that rate on the actual cost of that asset, and by applying that rate on the actual cost, the depreciation will be calculated and will be allowed on SLM basis. Depreciation at that rate will be calculated on that cost and will be allowed on SLM basis. You can claim on SLM basis, we will allow on SLM basis. Yes or no? So first you are supposed to do what type of business? Power business. Power generation, power distribution, power transmission, power generation, distribution, transmission, any of these business, power business you are doing. In that power business, whatever asset you have acquired, for that individual asset, whatever actual cost of that asset is there, on that actual cost, apply the rates. Which rates? Which are given in Appendix 1A to Rule 5.1. By applying this rate on the actual cost of that asset, you are supposed to calculate depreciation. And that depreciation will be allowed on what basis? SLM basis. Simple. Done. But this calculation you will be doing only if the asset is a specified asset. You are the owner of that asset. And that asset is used by you for your business. Sure. Easy, no? Now, sir, what are the rates prescribed? No need to even refer to that Appendix 1A because there are many assets, the name of many assets. The names of few assets you might not have heard also. Such type of names are given. Against those names, the rates of depreciation are prescribed. Getting my point? See, if we can get it here, Appendix 1A to Rule 5.1A of income tax and Appendix 1A. Yes. See. Appendix, yes. incometaxindia.gov.in. Income tax rules. Rule number 5, no? Ayyo. Where have I come? Last page. No, not last page. We have to go to the second page. See how many rules are there. Can you see Rule 5? Sorry, Rule 3, can you see? This we have already done. Salaries, valuation of perquisite. Rule 3, 1, accommodation. Right, no? So now we are going to go to Rule 5. Rule 5. Depreciation. Can you see depreciation? In 5, one A. This is 5.1. Rule 5.1 will be applicable later on when we are going to calculate the normal depreciation under clause 2. Yes or no? Likewise, there is Rule 5 sub rule 1A. Okay. I'm not able to scroll it over here. Okay. Next. I cannot see it over here. Okay. But this Rule 5, in this Rule 5 only, after 5.1, it is Rule 5.1a. I'm not able to scroll it here. Scroll down. Okay. There is some problem. So here you will see the list of all the assets. Against those assets, the rate will be given. Name of the asset, rate is given. Name of the asset, rate is given. So now you have to check that for your business, what did I say? For your business, what type of asset you have taken, purchased. You have to find the name of that asset. Against that asset, whatever rate is written, that's it. Pick up that rate, apply that rate on the actual cost of that asset. The depreciation which you have calculated by applying this rate on the actual cost, that depreciation you are supposed to claim on SLM basis. So don't worry, in the examination they will tell you the name of the asset also and at what rate the depreciation is charged as per Rule 5.1a, yes or no. So that rate will be definitely given in the question. No need to remember the names of the asset and the rates also. The rates are very, tricky rates. Somewhere it is 5.67%, somewhere it is 21.93%. These weird rates are given. So no need to remember the rates also, no need to remember the names also. These will be given in the question. Take the cost, apply the rate, calculate the depreciation, claim this depreciation on SLM basis. That's it. 32 subsection 1 clause 1 over. But like this, who will be able to calculate and claim? Only those assessees who are in the power business. they are allowed to calculate and claim their depreciation like this. Understanding? So let's take one example. Okay. Now, for example, in the previous year, 21-22, one asset was acquired. Asset A was acquired. Asset A was acquired for power business of X Limited. X Limited is a company, assessee for the business of X Limited. Power business of X Limited, one asset A was acquired. Now, assuming that the asset A was acquired and the actual cost of that asset was 100 lakhs. Okay. And on this asset, the rate prescribed in Appendix 1A to Rule 51A, we came to know that the rate was 10%. Let us keep 10% so that the calculations become easy. Yes or no? The rate can be any rate, but we are taking 10%. Okay. So what is the actual cost of that asset? 100 lakhs. And what is the rate of depreciation? 10%. Now, assuming that in the first year, the year in which the asset is acquired, first year, in this year, the asset was put to use for 180 days or more. See, if in this year, the asset will be put to use for a period of less than 180 days, then for the first year, the depreciation will be calculated at half rate. Yes or no? 10%? No, 5% for the first year. But for all the other years, it will be at 10%. So depreciation for the first year, assuming that the asset was used for a period of 180 days or more. Then can I say that in the previous year, 21-22, the depreciation would have been 10 lakhs? Yes or no? So now if you reduce 10 lakhs out of the cost, what will be the WDV? In the end of 21-22, what will be the WDV? The WDV will be 90 lakhs. Because out of 100 lakhs cost, 10 lakh cost is claimed as depreciation. So how much cost still remains? 90 lakhs. That is nothing but the WDV. Yes or no? In the previous year 22-23, again the depreciation will be calculated at what rate? Again 10%. But this 10% has to be applied on the actual cost and not the WDV. Depreciation is not on reducing balance method. It is on SLM basis. Yes or no? So SLM depreciation is always calculated on the actual cost. So what was the actual cost? 100. 10% of that again will be 10 lakhs. So for the second year also, the depreciation will be 10 lakhs and now the WDV will be 80 lakhs. Sure. Now previous year 23-24. Again the depreciation was 10 lakhs and now 70 lakhs will be the remaining cost, WDV. Now if I come to my previous year is 24-25 friends. So in this year also I would have calculated 10 lakh depreciation and I would have claimed. But to do that, I must have that asset in my business as on the last day of the previous year. See, if you want to claim the depreciation on any asset for the full year, no, so that asset must be present in your business as on the last day of that previous year. But what happened, no? In the previous year, 24-25, on 19th of November 2024, the asset was sold. The above asset was sold. Now tell me, if the above asset was sold during the previous year, it can be sold at any time. But if the asset was sold as on during the previous year 24-25, can I say now on 31st March 2025, that is as on the last day of the relevant previous year, the above asset does not exist in my business. So if the asset does not exist in the business anymore as on the last day of the previous year, how you would be able to claim the depreciation for the full year? From 1st to 31st March, full year depreciation we are going to give. But for that, the asset should be there as on the 31st March, which is not there. You have sold the asset. So for 24-25, since the asset does not remain in the business as on the last day, if the asset does not remain, therefore no depreciation can be claimed in the year in which the asset is sold. No depreciation on this asset shall be allowed. Understood this much? Now in the 24-25, if I say that the asset was sold, somebody will ask me, sir, but the asset was used till 19th of November, no? Do you remember something? I told you that we are not supposed to calculate the depreciation for the number of days the asset is used in business. We are supposed to calculate for the full year. And for the full year, you will be able to calculate the depreciation only when the asset remains in your business as on the last day. So full year depreciation is allowed only if the asset is there on last day. It is not there. So full year depreciation cannot be allowed. And here under the Income Tax Act, the depreciation is never calculated on the basis of number of days used or number of months used. So you cannot say, sir, at least from 1st April till 19th of November, I should get No, we are not doing accounting. In accounts, we would have done this. But here we cannot do it. Now in accounts, what we would have done? We would have taken the depreciation till 19th of November, whatever would have been the WDV as on 19th November. And that WDV as on 19th November, we would have compared with the selling price to determine the profit and loss arising on sale of the asset, which we would have debited or credited to the P&L account. Yes or no? That you are not going to do here. No need to do here. No need to calculate depreciation till 19th of November. No need. As on the date of sale on 19th November, what will be the WDV? The WDV will be 70 lakhs only without taking any depreciation. As on the date of sale, what is the WDV now? 70 lakhs. Understanding? Because we are not going to claim depreciation from 1st April to 19th November. Done? Now this asset was sold on what date? 19th November. 4 possibilities are there. A, B, C and D. It can be sold at any of these prices. Now tell me, if it is sold for 68 lakhs, possible or not possible? Can it be sold for 70 lakhs exact? Yes. Can it be sold for 79 lakhs? Yes. Can it be sold for 102 lakhs? Yes. All the 4 possibilities I have taken. Sure. Now in this year, no, you will be calculating the profit or loss. So tell me, how much will be the profit in first case? So there will be no profit, there will be loss of 2 lakhs. Because the value of the asset was 70 lakhs. Against that, how much you have received? 68. Meaning 2 lakh cost still remaining, no? Don't worry. That 2 lakh will not be treated as your capital loss. That 2 lakh you claim here only under the PGBP as the depreciation for this last year in the form of terminal depreciation. 32 subsection 1 clause 3 says that whatever WDV which you could not realize by selling the asset, that WDV would have been allowed to you in the form of depreciation, no? Hello? Which you could not claim now. So that remaining WDV will be the last depreciation which will be allowed in the year in which the asset is sold. Hello, sir. Understanding, sir? So in the first case, terminal depreciation, 2 lakhs. Second case, how much WDV remaining? 70, no? That 70 you have recovered. Forget. You forget. We also forget. And 30 lakhs we have already allowed in the last 3 years. Now tell me how much you are recovering in the fourth case? 79. Meaning you are recovering 9 lakhs more as compared to the WDV. That 9 lakhs you have recovered that cost which we have allowed in the past in the form of depreciation. Now that 9 lakh will be treated as your deemed PGBP income. That will be your balancing charge. Because we will consider this 9 lakh coming out of that cost which we have allowed in the past in the form of what? Depreciation. From that cost only you are recovering this 9 lakhs. So that cost was allowed under the PGBP head in the form of depreciation. Against that, whatever recovery is happening, to the extent of that, whatever recovery will happen, that will be treated as your PGBP only. That will not be treated as your profit under capital gain. That will be treated as your profit. That will be treated as your income under the PGBP head only. Because that is coming out of that cost which we have already allowed under the PGBP head. Yes or no? What in the last case? 102. So over and above 70, how much you have recovered? 32 you have recovered. Meaning that the entire cost which we allowed under the PGBP head in the form of depreciation, 30, that you have recovered. So that 30 will be your deemed PGBP. But 2 lakhs extra coming. Hello? That 2 lakh we never allowed in the PGBP head. That 2 lakh cannot be treated as your PGBP income. That 2 lakh will now become your capital gains. Understanding? So first case, case A, is your selling price less than WDV? Yes. If it is less than WDV, it has to be less than your actual cost also. How much was the selling price, friends? It was 68 lakhs. How much was the WDV? It was 70. How much was the actual cost? 100. Getting my point? The asset whose cost was 100, you sold that asset, no, right now? For how much? 68. So, to the extent of 68, your cost is recovered. How much still the cost is remaining? 32 lakh cost still remaining? Yes or no? Hello? Out of that 30 we have already allowed, no? So now claim 2 lakh cost as your depreciation. Terminal depreciation. How will you calculate that 2 lakh? In this case, you will take the WDV minus the selling price. WDV was 70, selling price was 68, and that extra 2 lakhs is there. That will be your terminal depreciation under section 32 subsection 1 clause 3. And this terminal depreciation you are going to claim in which year? Come on, tell me. You are going to claim this terminal depreciation in the previous year 24-25 itself, the year in which the asset is sold. In that year, this is the full and final depreciation which we are giving you. 100 lakh was the, apply your mind, simple logic. 100 lakh was the cost of the asset. That 100 lakh was supposed to be allowed as PGBP expense, yes or no, in the form of depreciation. Out of this 100, 30 is already allowed, no? But wait, don't talk about that 30. 100 lakh was the cost of the asset. Have you sold that asset? Yes. For how much? 68 lakh. So out of 100, 68 lakh recovered, no? So you also forget 68, we will also forget 68. What is the cost of the asset? Now the cost of the asset is 32 only. Hello, sir. Out of that 30 we have already allowed, no? Claim the balance 2 remaining as what? Terminal depreciation for the year in which the asset is sold. Understanding? Hello, sir. Now come on. B part. Selling price is equal to WDV, but it is less than actual cost. So how much is the selling price? 70. How much is the WDV? 70. How much is the actual cost? 100. Now in this case, No effect. Why no effect? What was the cost of the asset? 100. By selling this asset, how much you recovered? 70. Forget that 70, no. What is the balance cost now? 30. You also forget 70, we will also forget 70. Balance cost 30, which we have already allowed in the form of depreciation. What terminal depreciation? Nothing. And nothing will be taxable also. No effect to be given. Getting my point? Now, C point. Selling price is now more than WDV, but it is still less than actual cost. Sir, how come selling price was 79 lakhs, WDV was 70 and actual cost was 100? In this case, no, what you are supposed to do, you are supposed to take the selling price over and above WDV. So what was the selling price? 79. What was the WDV? 70. So over and above the WDV, how much you are getting? 9 lakhs. This 9 lakh is coming out of your depreciation. Meaning that, please pay attention. 100 lakh was the cost. You sold the asset for how much? 79. Forget 79. You also forget. We will also forget. How much is the balance cost remaining? 21 only, no? So you should have taken the 21 lakh as depreciation. How much you have already taken? 30. Meaning how much extra you have taken? 9 only. That 9 lakh extra depreciation you have claimed out of your PGBP income. That means your PGBP income is reduced by this 9 lakh. No. Now increase this 9 lakh in PGBP only. Hello, sir. But wait. The recovery of the selling price over and above WDV to the extent of depreciation only will be treated as your PGBP income. Hello, sir. The recovery of the selling price over and above WDV to the extent of depreciation only will be taken as what? Deemed PGBP income. This 9 lakhs should not be more than 30 lakhs. If it is more than 30 lakhs, to the extent of 30 lakhs only, the deemed PGBP income will be there. Yes or no? So you have to restrict this amount to the extent of your depreciation. How much was your depreciation? You have to take actual cost. You have to reduce WDV out of this. Actual cost was 100. WDV was 70, meaning that 30 lakh was your depreciation. Okay, no? 9 lakh or 30 lakh, whichever is lower. So lower amount, which is equal to 9 lakhs. So out of 30 lakh, the 9 lakh which you have recovered will be treated as your balancing charge. What you will call this amount? Balancing charge, and this is treated as your deemed PGBP income as per section 41.2. As per 41.2, this balancing charge will now become your deemed PGBP income. Will you remember this? Sure. Because this 9 is coming out of that 30 only, which we have allowed under PGBP. So your business income should increase by 9 now. Because this 9 was allowed as a part of depreciation, meaning 30 lakh business income has come down. So out of that 30, 9 which you have recovered right now, hello, that 9 should increase your PGBP only. Got it? Next one. Next one is D. Come on. Selling price is now more than WDV and it is also more than actual cost. Tell me how much is the selling price? 102. WDV is 70. How much is the actual cost? 100. In this, what you will do? Come on, tell me. In this situation, you will take the selling price over and above WDV. What was the selling price? 102. What was the WDV? 70. So what is the selling price over and above WDV? It is 32 lakhs. Hello? But this amount should not be more than your depreciation. So you have to restrict. So what you will write? Or actual cost, which was 100. Out of that, if you reduce WDV, you will get the amount of depreciation which was allowed to you, know. So that was 30 lakhs. So to the extent of 30 lakhs, whatever recovery you are making in excess of WDV, that will be treated as your PGBP income, deemed PGBP. So what you will do? You will take the same thing, balancing charge, copy. How much balancing charge you will take? Come on, tell me. Lower amount, which is equal to 30 lakhs. And this amount will only be taken as your balancing charge. So what about that extra 2 lakhs? That will be treated as your capital gains. Understanding? So actual cost, any selling price over and above the actual cost will only go to capital gain. Selling price to the extent of WDV, to the extent of actual cost. Selling price to the extent of actual cost will be covered in PGBP only. But any selling price over and above actual cost, which was 102 and this was 100, giving you 2 lakhs. This 2 lakhs will be now treated as your capital gain income. Will you remember this? All the 4 possibilities we have done. 100 lakh was the cost of the asset. Bloody that entire 100 lakh you have recovered. That means why you have taken that 30 lakhs cost from us? That 30 also recovered, no? Make that 30 your deemed PGBP. And 2 lakhs extra over and above cost which you have recovered, no? Which we never allowed in PGBP. Yes or no? That 2 lakh we never allowed in PGBP. So that 2 lakh we cannot make your PGBP income. But that 2 lakh will not leave. That 2 lakh will charge under the head capital gains. Got it? It cannot be easier than this. Huh? Now, the terminal depreciation and the balancing charge. Concept of terminal depreciation and balancing charge will arise. When it will arise? Come on, tell me. Only if the asset is sold in a year other than the year of its acquisition. See, the year of acquisition of the asset was 21-22. Is the asset sold in that same year or any other year? So if the asset is sold in any year other than, later than the year of acquisition, only then the terminal depreciation and balancing charge will come. Because in that case, you have charged depreciation under 32(1)(1) for few years. And after charging depreciation for few years under section 32(1)(1), then later on you are selling the asset in any other year, later on year. Then terminal depreciation or balancing charge will come. But what if the asset which was bought in 21-22, in that same year it was sold without charging depreciation for a single year also? Can it be possible? The year in which you acquired the asset for power business, in that same year you sold that asset without even charging the depreciation for that same year also. Single year also the depreciation is not charged. In that case, no terminal depreciation, no balancing charge. Whatever loss or gain will happen, no, will always go to capital gain. Getting my point? So write down. Write down. Concept of terminal depreciation and balancing charge will arise. Concept of terminal depreciation and balancing charge will arise only if the asset acquired for power business is sold in subsequent year, in a year different from the year of its acquisition, in a year different from the year of its acquisition, in the bracket you will write down subsequent, in any subsequent year, in any subsequent year, after claiming depreciation under section 32(1)(1). Full stop. Paragraph. If the asset acquired for power business is sold in the same previous year, in which it was acquired, without charging depreciation under section 32(1)(1), for even a single year, then no terminal depreciation, no balancing charge will arise. No terminal depreciation, no balancing charge will arise. And the resulting gain or loss would be considered under capital gains head. Would be considered under capital gains head. Full stop. Will you remember this? Sure. This is the end of normal depreciation available to assessees engaged in power business along with terminal depreciation clause 3. Sure. Now we are going to do the second type of depreciation. 32(1)(2). 32(1)(2). Okay. Pay attention now. 32 subsection 1 clause 2 says that if an assessee, any person who is engaged in any business or profession, and for his business or profession, he has acquired assets. Yes or no? For this business or profession, he has acquired the assets. So that assessee will first calculate the value of block of assets. He will have to first determine the value of the block of assets. And on that value, he will have to apply the prescribed rates of depreciation. And what are the rates prescribed? The prescribed rates are given in Appendix 1 to Rule 5, Sub-Rule 1. Getting my point? Apply the prescribed rates of depreciation, and where the rates are prescribed. Now see, you cannot apply those rates which are given in Appendix 1A because those rates are for single asset. So on this asset, On the actual cost of this asset, apply this. On the actual cost of this asset, apply this. Here you are supposed to take what? Here you are supposed to take block of assets. Not a single asset. Block means group of assets. And you will have to determine the value of that block. And on the value of the block of asset, the different rates are prescribed in Appendix 1 to Rule 5.1. By applying these prescribed rates, the depreciation will be calculated and it will be allowed at written down value, WDV basis. Getting my point? Here SLM basis is not allowed, WDV basis. So whatever depreciation you will calculate, that depreciation will be available to you on what basis? WDV basis only. And that depreciation you are going to calculate on the block's value by applying the prescribed rates in Appendix 1 to Rule 5.1. Now you'll have to see the Appendix 1 also. And you'll have to remember the rates also for these blocks. What all things you are supposed to remember, I'll tell you. Don't worry about that. And very easy rates. No need to worry. First of all, we'll discuss, sir, what is this block? Then we will discuss that how to determine the value of this block. And once that discussion is done, then how to calculate the depreciation on WDV basis by applying these rates. I will show you the prescribed rates also of Appendix 1. Yes or no? So first things first. What is block? Block of assets. The definition is given in section 2 subsection 11. So block of assets is defined under section 2 subsection 11. So according to this definition, block of asset is group of assets. When certain assets are brought together, a group of the asset is formed, no? That group is known as what? Block. But that group will be known as block only if that the group has same type of asset, having same rate of depreciation. Depreciation cannot be different. Depreciation rate should be same on these assets. Sir, what if buildings are there? All the buildings will be grouped together, but all the buildings do not have the same rate. Some buildings will have 5% rate. Some buildings will have 10% rate. Some buildings will have 40% rate. So what you will do? If you will take the group of all the buildings, are all the buildings having the same rate? No. Buildings having 10% rate, their block will be separate. Buildings having 40% rate, their block will be separate. Buildings having 5%, their block will be separate. All buildings and all having 5%. All buildings, all having 40% rate. All buildings, all having 10% rate. Sir, furniture also has 10% rate, sir. So, building having 10% rate, furniture having 10% rate, 10% rate is same, but assets are different. Same type of asset or different type of asset. So, furniture having 10% rate will be a separate block. And even the building which is having a 10% rate, the rate is same. You see, no? We'll have a separate block because the assets are different. So in a block, you will always group those assets which are of same type, having the same rate. So same type of asset, having the same rate of depreciation, combine them together, you will get a block. And now you'll have to calculate the value of that block. What is value of the block, you know? It is nothing but the total of the actual cost of all the assets which are there in that block. That's it. As on the last day of the relevant previous year. So as on the last day of the previous year, whatever assets which are available in that block, what was the total cost of all those assets? That total cost will be the total value of that block. So now in order to understand that how to determine that value, what we are going to do, first of all, understand the block is nothing but a basket, a small basket. And I will put a name on that basket. That okay, the name of the basket is plant and machinery, depreciable at the rate of 15%. Now I have identified this basket, identified this block. What will come in this block? All the plant and machinery whose rate of depreciation is 15% will fall in this block, fall in this basket. So as and when the machinery will come, the identity of individual machinery will go. Identity of individual asset will be lost. Now there is no asset. The moment it becomes part of the block, the identity of the asset is gone. Now asset does not remain because the block is there. Hello. So you are never going to identify individual assets here. You are supposed to put all the assets in the block. You are supposed to identify the block only. That's it. The moment you put any asset in the block, its individuality, its identity is lost. Got it, sir? Everyone. So for example, see, I'll give you one example. During the previous year, 23-24, I'm talking about the last year, okay, no? Last year. Last year, I started my business. So in the last year, no? In the last year, I acquired plant and machinery for my business. Plant and machinery A I acquired. Plant and machinery B also I acquired. Plant and machinery C also I acquired. And I acquired plant and machinery D also. And these plant and machineries were acquired in the last year at different dates. For example, A was acquired on 11th July 2024. This is date of acquisition. And if nothing is mentioned, we will assume that the assets were put to use on the same date only. Yes or no? Otherwise, the date when the assets are put to use, those dates will also be given. If those dates are not given, we have to assume that the assets which are purchased on that date are immediately put to use. If you don't want us to take that assumption, give us the date of purchase, no? Give us the date when the asset was put to use, no? If you are not giving the date when the asset is put to use, we will assume that the asset was put to use immediately on the date on which it was purchased. Yes or no? So, this was acquired for 4 lakhs. Another was purchased on 13th of September 2024 for rupees 6 lakhs. Another was purchased on 8th of October 2024 and the cost of that was 5 lakhs. Another was purchased on 18th of February 2000 here no, I have to take last year, no? Last year. This is 23, this will be 24. Last year, no, I'm talking about last year. So in the last year, these plant and machineries were acquired. Because last year only I started my business, okay, no? And the last machine was purchased for, this was also purchased for 5 lakhs. Is it possible this can happen? Now tell me, have I started a new business or the business was already in existence? I started the business last year only. So if I started the business last year, whatever assets I will buy for that business in that year, Because of that, the block of these assets will be forming for the first time in that year only. So when I started the business, I bought the plant and machinery. I will first make the block in that year only, in the year in which I started the business and acquired the asset. So in that year only, this block will be formed for the first time. Okay. So in 23-24, I made one basket. I made one basket. Okay. Now in this basket, what I'll do? I'll give the name to this basket, plant and machinery, at the rate of 15%. This basket was created for the first time in the last year. Getting my point? Now tell me, if I say that this plant and machinery basket which I have created, okay, in this first time I made this basket, I made this block on what date? The moment I acquired plant and machinery A, I would have to make this basket. I would have to make this block. Now in this block, this plant and machinery A will go. A's identity gone. A's identity gone. Now what is the value of this basket? 4 lakhs. 4 lakhs, no? Now I will buy, later on I am going and buying plant and machinery B. Same type of asset, same rate of depreciation. Will I make a separate basket or I already have a basket? I already have a block, no? So in that block only, this plant and machinery will fall now. So this plant and machinery B will fall here. Now tell me, identity of B is gone. And what will be the value of this block? 4 plus 6. Now the value will be 10 lakhs. 10 lakh is what? Total of cost, actual cost of all those assets which are there in the block. That is nothing but the value of that block. Getting my point? Now tell me, C I will buy. I will put C here. What will be the value of the block? 15 lakhs. If I buy D, D will come here. What will be the total value of the block? 20 lakhs. Can I say 20 lakh is nothing but total of actual cost of all the assets which are there in my block? That is nothing but the value of the block. Now this 20 lakh is nothing but the total actual cost of all those assets which are there in the block. This 20 lakh is not allowed to me at once. This 20 lakh is only allowed in the form of depreciation in small parts. Yes or no? So now tell me, as on the last day of the previous year, do I have all these assets in the block? All those 4 assets are there in the block as on the last day of the previous year. And all those assets are having 20 lakh value against them. I have to claim this amount for these 4 assets which are there in the block as on the last day of the relevant previous year. I have to claim this amount in the form of depreciation. But on this amount, I will apply a rate. What rate? 15%. But that 15% if I apply on the entire 20 lakhs, no, it will be a blunder. Why? Because don't you think that as on the last day, what did I say? As on the last day of the previous year, my block also has these 2 assets which were acquired during the year and put to use for less than 180 days. So in my 20 lakhs, there is some, in my total assets in the block, there are certain assets in the block which were acquired during this year but put to use for less than 180 days. Value to the extent of that cost, on that value, full year depreciation will be there, but it will be at half rate. And on the balance value of the block, I can charge full rate. Getting my point? So now if I am told to calculate the depreciation, how will I calculate the depreciation on 10 lakhs? Which 10 lakhs, sir? This 10 lakhs. 4 plus 6. Okay. I will apply 15%. So first of all, wait, no, don't do it here. Do it here. Now out of this 20 lakhs, first of all, I will separate the value of those assets which are acquired in this year but put to use for less than 180 days. Separate that value, because on that you are supposed to apply half rate. Yes or no? So what was the value of those assets? 5 plus 5, 10 lakhs. So on that 10 lakhs, I will apply full rate or half rate, half of the applicable rate, 7.5. So the depreciation will be 75,000. Did you all get this? And now on the balance 10 lakh, whatever remains, on that I will apply the full rate, 15%. And that amounts to 1,50,000. Did you get the depreciation on the entire value? Calculate total. 2,25,000 is what? 2,25,000 is the depreciation which you have calculated under section 32 subsection 1 clause 2, and this depreciation will be allowed for the previous year 23-24. Last year this depreciation was allowed to you. Now tell me, what was the total cost of the block last year? Total cost, total value of the block was 20. Out of that 20, 2,25,000 cost was allowed in the last year in the form of what? Depreciation. So how much cost still remains in the block? 20 lakh minus 2,25,000, the balance cost still remains in the block, no? So can I say the closing WDV as on 31st March 2024 has 4 assets A, B, C, D. Now whatever is the cost remaining against these 4 assets was 20 lakh minus 2,25,000. How much? 17,75,000, if I'm not wrong. 1775? Sure? First year over. Now 24-25, will you do this business? In 24-25 you will do this business? Are you going to make this plant and machinery block again, or this will be used in the next year also now? Next year this same block will be used in their business, no? So next year the plant and machinery block at the rate of 15%, yes or no? What was the opening WDV as on 1st April 2024? Come on, tell me. So now I am in which year? I am in previous year 24-25. So in the previous year 24-25, now that same plant and machinery block will be used in my business from the first day. Hello? So from the first day of the previous year 24-25, now this plant and machinery block will be used in my business. So what was the opening in that plant and machinery block? 4 assets were there, no? A, B, C, D. Hello? Having how much value? 17,75,000. That is nothing but the remaining cost of those 4 assets which are there in the block, which is yet to be claimed in the form of depreciation. Hello, sir. So can I say there were 4 assets whose value was 17,75,000? Tell me yes or no. Now, don't you think that in 24-25 also I would have bought some new plant and machinery having 15% rate? For those new plant and machinery, I will make a new block, or I will put those new plant and machinery in this block only. So new machine coming in the block, new machines coming in the block, additions. So what I'll do, during the previous year 24-25, I will write add additions made to the block during previous year 24-25. Okay, no? So additions which were made during the previous year 24-25, meaning that I acquired 2 more plant and machinery E, plant and machinery F. One plant and machinery which I acquired in this year, which was added to the block. This is a new plant and machinery which I am acquiring for the first time in 24-25. It is added to the block, was used in this year for 180 days or more. And second plant and machinery which I acquired, plant and machinery F, acquired in this year, but in this year it was put to use for less than 180 days. So what I'll do, in my additions only, I will split these two parts. So those additions which are made in this year but put to use for less than 180 days separately and put to use in this year for 180 days or more, I will write them separately. So one plant and machinery which I acquired was put to use, additions during the previous year 24-25, which were put to use for greater than equal to 180 days and which was put to use for less than 180 days. Getting my point? One plant and machinery, one plant and machinery. And what was the cost? Cost was 2 lakh for this and 4 lakh for this. Possible or not possible? Yes or no? Now tell me, as on the last day of the previous year, how many plant and machineries should be there? 4 plus 2 bought in this year. Hello, assuming that 4 brought in the first year are being used till the last day. Hello. And these two which are bought during the year are also used till the last day. Getting my point? So as on the last day of my previous year, how many machines, how many assets should be there in the block? 6. What was the cost of those all the assets remaining as on the last day? 17 plus 6 will give me 23,75,000. Yes or no? But is it possible that during the same previous year, out of these plant and machineries, few plant and machineries were sold, scrapped? Possible or not? So definitely those plant and machineries are not going to be with me as on the last day of the year. So I will have to reduce them from here. So for example, I sold 2 plant and machinery, old ones, not the new ones. Old 2 plant and machineries I sold from the block. So will these plant and machinery remain in my business in the block, or they will go out from my business from the block? They will go out. So when the machines are coming in the business, they are added to the block. When the assets are going out of the business, they are removed from the block. Yes or no? Removed means deletions. And deletion can happen because of any reason. Hello, sir. I'm not saying only sale. It can be by any reason. It can be scrapped also. It can be compulsory acquisition also. Yes or no? By any reason, if the asset is leaving my business, so I have to take that asset out of my block also. So 2 plant and machineries of the block went away. For example, I sold them. So sold them means coming in the block or going out of the block? Going out. So I will write down less deletions during previous year 24-25. So how many deletions? 2. Now tell me, by selling the 2 machines, will you get some money? Will you get some selling price? Don't you think that the amount which is coming to you, for example, it was 10 lakh rupees. Not 10 lakh, just assume 5 lakh rupees. By selling the 2 machines, you are getting 5 lakhs. Can I say that 5 lakh is nothing but the recovery of that cost which is there in the block? So last day, 6 assets should be there having this much cost. Yes or no? 23,75,000. But from these 6 assets, during the year 2 assets are sold and 5 lakh out of this cost is recovered. No? Hello. So reduce that 5 lakh. Whatever amount which you will receive. Hello. By on deletion. That is nothing but the recovery of the cost of those assets which are there in the block. So reduce that out of the block's value. Getting my point? Now tell me how many assets are there? 4 assets. Against that, how much? 18 lakh 75,000. Everyone getting this 18 lakh 75,000? Sure. Now on this 18 lakh 70, this is the last day. As on the last day of my previous year, 4 assets are still there in the block. and having how much cost, how much remaining cost, 18 lakh 75. Now this 18 lakh 75 should be allowed to me in the form of depreciation. This is my depreciable value. Now whatever depreciation will be calculated on this value and not 23 lakh 75. Why? Because from 2375 I have already recovered 5 lakhs in this year. No. So you also forget 5 lakhs. We will also forget 5 lakhs. Don't claim depreciation on that 5 lakhs. Claim depreciation on the value remaining after adjusting this 5 lakhs. Getting my point? So tell me, how much rate you will apply? 15%. But you have to ask yourself one question. The asset which was put to use for less than 180 days, this one asset, this is still with me as on the last day. What was the cost of this asset? So that 4 lakh is there in 18 lakh 75. No, separate it on that half rate. Hello sir. So now what I will do, out of this, on 4 lakhs I will apply 15%. No, half of 15%. So 4 lakh into 7.5% will be how much? 30,000. And on the balance 14 lakh 75,000 I will apply 15%. So 14 lakh 75,000 into 15% will be 221,250. Everyone got this? Can you add both these depreciations? You will get 2,51,250. And my dear friend, this is your depreciation, normal depreciation, which you have calculated under section 32 subsection 1 clause 2. Now this depreciation will be allowed, meaning that as on the last day of the relevant previous year, in your block you have this much cost, yes or no? But this entire cost will not be allowed as depreciation in this year. Out of this cost, only this much cost will be allowed in the previous year 24-25. Getting my point? So for previous year 24-25, out of 1875, this much will be allowed as depreciation. So therefore, can I say the closing WDV as on 31st March 2025 will be nothing but 18,75,000 minus 2,51,250. Yes or no, friends? So that will be 4 assets still remaining. Hello, 4 assets still remaining, but with 16,23,750. This is the closing WDV for this year, and now these 4 assets will be used in the business in the next year. This will become opening in the next year. Again additions less than 180 days, 180 days or more. Then again deletions. Again the same calculation will happen in the next year. Did you know how to calculate the value of the block now? Sure. Simple, no? Very easy this is. Now pay attention. I will put you in some trouble. Should I? Pay attention now. Opening WDV in the block was, for example, I had 4 assets having 10 lakh rupees of opening WDV. Possible, not possible? So there is one asset, block of assets. For example, the block of asset was furniture, having rate, furniture having rate 10%. So this is the block of furniture where I am having 4 assets, 4 furniture and having total value of 10 lakhs. Have I made this block for the first time in this year? Or already made earlier? Already made earlier. So this 4 furniture which is there in my business, no, as on the first day. I have not bought this 4 furniture in this year. Earlier bought in any earlier year. What cost they were bought? They were bought at 10 lakhs? No, they would have been bought at higher amount. Out of that, some cost was already allowed earlier in the form of what? Depreciation. But remaining cost of these 4 assets is 10 lakh, which now I will claim in from this year onwards. Yes or no? Now, is there any additions? Yes, additions can be greater than equal to 180 days also and less than 180 days also. Yes or no? So I have acquired one furniture each. So the value of one furniture was 5 lakh. Not 5 lakh. Let's take it 1 lakh. And the another furniture was 9 lakhs. Possible or not? So how much furniture I do have now? 6 and having a value of 20 lakhs. So at the last day of the previous year, this should have been my furniture. These many assets should have been there in my block having this much of value. But don't you think that during the previous year out of this block, some assets would have gone? So I will reduce the deletions. So deletion was, let's say, 4 assets, not 4, but 3 assets sold from the block. Okay, all the 3 assets sold. And let's say all the 3 assets are sold for 9 lakh rupees. 9 lakh. So 3 remaining. And against that, how much cost? 11 lakhs. Now ask yourself one question. The 3 which remaining, no, has this also. Meaning the asset which was acquired in this year, which was put to use for less than 180 days, even that asset is there with me as on the last day. So from this value, I will have to separate what? 9 lakhs. On that, I will apply half rate. And on the balance 2 lakh, I will apply full rate. Will you be able to do this? This is a simple thing. Wait, I want to put you in trouble. Now I am putting you in trouble. Pay attention. Three assets gone. I found a good guy who gave me 14 lakhs for my 3 assets. So now how many assets still remaining? 3. How much value? 6 lakhs. Now tell me one thing. Do you still have this asset in the block? The answer is yes. It is not yet sold. So out of the value, on this value, the depreciation is to be calculated at half, and on the balance it has to be full rate. Now tell me, will you be able to segregate 9 lakh out of this? Because the value which remains itself is lower than the cost of that asset which was purchased in this year and put to use for less than 180 days. So in this scenario, what you will do? You cannot segregate some amount on that half rate and on the balance full rate. You cannot do this segregation. Now you'll have to decide that on this either full rate will be applicable or half rate will be applicable. Only one. Yes or no? What rate? Come on, tell me. Always half rate. Because this asset is still there. Getting my point? The asset which was acquired in this year and put to use for less than 180 days, it is still there as on the last day of your previous year in your business. So whatever value remains, if that value is lower than the cost of that asset, no, then on that entire value you have to apply 15%. No, half of 15%. Sorry, we'll apply 10%, no, here, because the block is for furniture. Getting my point? So on this entire 6 lakh, I'll apply 10% furniture. No, half of that. So 5% of 6 lakh will be 30,000 depreciation. Got it? So what will be the closing WDV? 3 assets will have 5 lakh 70. That will be closing WDV. That will become opening in the next year. Understanding? But wait. You can take full rate also, huh? But to take full rate, no. That asset which you had acquired in this year, put to use for less than 180 days, should not be there as on the last day of your previous year. So in this 3 asset, if this asset was not there, no, then on that 6 lakh, don't take half, take full rate. Getting my point? Sure, everyone? Perfect. Okay. So what we are going to do now, did you understand so far? Any problems? Sure, no, we are going to solve the questions also, huh? But today I have to end the lecture here only. I'll not be able to continue beyond this because I have some urgent commitment. I've already got 3-4 calls, so I'll not be continue beyond this. So we are going to meet tomorrow at the same time, and same time we'll continue, but tomorrow we'll extend half an hour, right? So half an hour which I'm not taking right now, that I'll extend tomorrow. Sure, no? But today at home, please revise all these things. Sure? See you all tomorrow. Bye bye.